would do would be sell off some of that. The Fed doesn't own physical gold; they own certificates that represent gold held in Fort Knox by the Treasury. Her bill would require the Fed to start selling gold to buy Bitcoin.
Wow!
To sort of replace it as a reserve asset. Now, obviously, you think about telegraphing to the market 100 billion buy at today's prices. I mean, sky's the limit on the price. That's the thinking, at least.
Because what I know about Bitcoin, I learned from Mike McGlone: a fixed, if not declining, supply, and presumably ever more use cases.
Yeah. Every 4 years, the amount that's mined, that's the new supply, it gets cut in half. So that proposed government buy would actually overwhelm the amount that's mined.
All right. Another thing, the Trump's transition team is discussing the creation of a White House post dedicated to digital asset policy.
Yeah, that's a scoop we had yesterday. It's still sort of a lot of questions about what exactly that would mean, but the idea is, give the crypto industry sort of a representative in the White House to manage what they want to do with regulations and that sort of thing. Again, just another sign of this sort of 180-degree paradigm shift in how the government will think about crypto and Bitcoin, especially under a Trump presidency, compared to the very tough crackdown that we saw under President Biden. So a real dramatic change.
Exactly. And so I'm asking myself, how do we get to 60,000 to 100,000? That sounds like the reason. And it feels like Elon Musk has his fingerprints on some of this.
Yeah. I mean, he's a crypto aficionado for sure. He named the Department of Government Efficiency is just named after a meme coin. But I would throw in Michael Saylor and MicroStrategy is another really important element here. He's tapping capital markets for $42 billion, telling the world what he's going to do with it. Just buy more Bitcoin, and his stock is even outperforming Bitcoin itself by a tremendous amount. So it's really an interesting time to watch all this unfold.
All right, folks. I mean, we have 2,400 reporters around the world of Bloomberg News. Many of them, some of our best, have been and continue to be dedicated to this whole crypto market and reporting on the crypto market. And at least I know how serious Bloomberg News is about crypto when they appoint Michael Regan to be a team leader, because he's been doing this stuff a long time. He knows good journalism, and you put Michael Regan on top of this team, that means we're serious about coverage of crypto. So we'll stay on top of this stuff. But again, looking at the Bitcoin, up $2,300 here today, just under $97,000 per token. So a lot of folks out there are making some big bets on crypto. My youngest, who bought some NVIDIA just recently, talked to me about buying Bitcoin. I said, not with any of the money I've contributed to your account. If you want to go out and spend some of your money, go ahead. So that's how we think about it here.
Investing success relies on two things: skill and stamina. At New York Life Investments, we're an asset management partner built to help you master both. Tap into forward-thinking strategies and real-time insights at NewYorkLifeInvestments.com.
Success is more than the final destination. It's a path you take one step at a time. It's discipline, it's teamwork, and it's the drive and passion inside of us that comes before all recognition. It's what Stifel's been doing for over 130 years. Quietly, yet strategically, Stifel's become one of the fastest growing wealth management and investment banking firms in the country. Our financial advisors go beyond traditional wealth management to provide clients with direct access to one of the industry's largest equity research franchises and a leading middle market investment bank, because success is the drive it takes to keep climbing, the passion to keep investing, the best of each of us made better by the best in all of us. And that is where success meets success. Start your journey at Stifel.com. That's STIFEL.com.
Stifel Nicholas and Company Incorporated, member SIPC and NYSE.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Renactor Broker studio interactive. I don't know what word I said, but interactive broker studio.
That works.
Right here in Midtown Manhattan. So NVIDIA was being billed as like the market mover for the rest of the year, that it was more important than the Fed, it was more important than any jobs data or inflation, but now it's over, so now what? David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital Management, joins us now. So David, what now? Like, now what are you focused on?
What now? After NVIDIA, that many have said might be more important to the markets than the Fed. But we do have PCE coming up at the end of the month, PEC for October, and then we'll get CPI and another round of data here in early December. And I think, for the Fed, as far as the Fed is concerned, they're kind of between a rock and a hard place. They have, since September, when we were looking at more than 200 basis points in cuts by this time next year, we've had unemployment has improved, has gotten lower, growth is stronger, inflation has crept up a little bit. On the flip side of that, if we look at personal bankruptcies, we look at auto delinquencies on auto loans, credit card debt, those are all at multi-year or decade highs. So there's cracks in the economy, there's things to be concerned about, but in terms of some of the other factors that the Fed looks at, I think there's a lean towards not cutting in December, and the markets won't like that. So I think we're in for some volatility. We've had a great 2022 and 23, and I think we're in for some volatility in 23 and 24, and in for some volatility in 25.
David, it was 2 weeks ago yesterday that we all woke up to a new president. We now know that we have a Republican-controlled Senate and House. Did that change your outlook or the way you approach markets, or maybe how you allocate assets here?
Yeah, we always say, and we educate our clients, and the thing that we try to make sure is that clients, and investors in general, there's a tendency to go to cash in an election year because they want to wait and see what happens in an election. And inevitably, election years turn out to be very good on average. This one, the best election year since 1936. But what we do want to do is look through to what we have for Congress and the executive branch and what that means as tactical asset allocators. And the big wild card for next year is tariffs and what that could mean in terms of a trade war. We know what that brought in 2016 in President Trump's first term. So there is some concern that with tariffs, that's also going to be problematic for inflation. How much of it was campaign rhetoric versus how much of it will go into effect? They seem pretty serious about it. Howard Lutnick, who was named Commerce Secretary, he's almost a self-proclaimed tariff czar. So I think there's going to be a run at it. What that results in terms of trade wars, the industries that affects versus others, that'll be very important for market participants.
When you mentioned there was going to be more volatility, what assets do you think will have the most volatility? Whether you're looking at, say, politics, as you mentioned, you also talked about potentially skipping a cut in December. Where do we see the most action?
Well, we're seeing a lot of volatility in bonds. We already have this year. Interestingly enough, as the Fed cut the first time, they've now cut 75 basis points during that time frame. Both the 10-year and 30-year have gone up about 75 basis points, which is that counterintuitive reaction function. So we've seen really a lot of volatility in the bond market. But we think we'll see increased volatility in the stock market, because even though the election is behind us, now that uncertainty is behind us, we have the uncertainty over tariffs and just how aggressive some of these moves will be. Even when we talk about eliminating or significantly reducing government agencies, what that would mean to unemployment. So there's just a lot of new factors to look at in terms of overall investment strategy that will be driving volatility into both bonds and stocks. We don't think about volatility a lot for bonds, but we've seen a great deal. If we look at the MOVE index, which is like the VIX for stocks, bonds have been quite volatile. They'll continue to be. And we think we'll see more volatility in the stock market.
So we started off, David, by just chatting about NVIDIA. I thought the numbers were pretty solid, but of course the expectations were just massive here. What did you learn, if anything, last night from NVIDIA's results that maybe change or affirm your thoughts on technology?
Well, first of all, NVIDIA is, if you talk about a company that has a very wide moat around it because of generative AI and their place in that, it's NVIDIA. They beat top line and bottom line. Should have been a good report, but the problem is investors have become accustomed to these blowout numbers, just blowout numbers for NVIDIA that they've had in past quarters. So it's a little bit of a letdown on the size of the beat. The stock sold off, and after I was trading, pre-market was down, and it's come back a little bit. But the bottom line is NVIDIA still has a long runway ahead of it, and their new generative AI chip is doing well, and I think that it still makes sense as part of a portfolio.
What about Bitcoin? Are you on the Bitcoin bull train here?
Yeah, the interesting thing about Bitcoin is those that have been bearish on Bitcoin, fake internet money, it'll eventually go to zero, Ponzi scheme, whatever. They've been humbled, right? They've been humbled. Bitcoin is, as we've said, it's here to stay. It may be an asset class all in of itself, but just looking at what's happened here since the election, the talk of a strategic Bitcoin reserve. You had a segment earlier on the show about it. President Trump wants to call himself the Bitcoin president. So we're seeing the asset or the asset class of just Bitcoin by itself,
Yep.
not the other coins, is rising on that speculation. And we look at it like gold, really. If it's digital gold.
Right.
Gold doesn't have a price to earnings ratio. It doesn't have a dividend yield. Bitcoin doesn't either. There is more gold that can be mined. Bitcoin, there's a fixed amount.
Right. David, thank you so much for joining us. Always appreciate getting a few minutes of your time. David Kudla, he's the founder, chief executive officer, and chief investment officer. I guess that makes him the boss at Mainstay Capital Management. Appreciate that.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The forces shaping markets and the economy are often hiding behind a blur of numbers.
So that's why we created The Big Take from Bloomberg Podcasts, to give you the context you need to make sense of it all.
Every day, in just 15 minutes, we dive into one global business story that matters.
You'll hear from Bloomberg journalists like Matt Levine.
A lot of this meme stock stuff is, I think, embarrassing to the SEC.
Follow The Big Take podcast on the iHeartRadio app, Apple Podcasts, or wherever you listen.
The $5 meal deal at McDonald's means you get to pick between a McDouble or a McChicken. Then get a small fry, a small drink, and a 4-piece McNuggets. That's a lot of McDonald's for not a lot of money. Get the $5 meal deal today.
Prices and participation may vary for a limited time only.
Get the tools you need to help build your brand. Discover more apps to help manage your everyday. Head to trym365.com. That's TRYM365.com to learn how you can get more done with Microsoft 365.
What's your boldest, truly ambitious life goal? Everyone has one, and everyone deserves a way to get there. That's why State Street offers a wide variety of ETFs to give all investors access to the market and the chance to reach their goals. Like with DIA, where you get 30 U.S. blue chip stocks in a single trade. Wherever you're heading, getting there starts here with State Street.
Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit ssga.com for prospectus containing this and other information. Read it carefully. DIA is subject to risks similar to those of stocks. All ETFs are subject to risk, including possible loss of principal. Alps Distributors, Inc. Distributor.
Good Friday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with Morgan Brennan here at Post 9, along with David Faber at the New York Stock Exchange. Sarah Eisen's on assignment. Coming off the best day for the Dow since November 6th and adding a little bit more. Dow's up almost 300 points, 59.66 S&P. Got the best PMIs since 2022, and that has lifted the front end of the curve, although the 10-year remains a little suppressed.
Well, we're 30 minutes into the trading session, so here are three big movers that we're watching this Friday. Shares of Gap soaring. The retailer raising its sales outlook for the year after reporting market share growth across its brands in the third quarter. The stock's had a volatile ride this year. It's really a turnaround story. Shares are up almost 8% right now. Shares of Intuit, though, those are falling after its earnings guidance came in below street estimates. The company delaying promotions for its desktop version of TurboTax. You can see those shares are down about 4%. And we are continuing to keep a close eye on the crypto trade. Bitcoin hitting new all-time highs again, hitting $98,525. We are getting so much closer to that $100,000 milestone. A lot of chatter, though, that maybe we're overbought here. We've got more on this trade ahead in the show.
Let's get some Umish with Rick Santelli. Hey, Rick.
Yes, there's more warm data here, Carl. So we look at University of Michigan. These are November finals. So we take the mid-month reads and we toss them. So 73.0 was the mid-month read. That now becomes 71.8. So that gets downgraded a bit. Now, if we look at current conditions, that gets downgraded to 63.9 from 64.4. And if we continue to look at the downgrades, University of Michigan expectations, one lies ahead, moves from 78.5 mid-month to 76.9. But here's where it gets interesting. The inflation data, the one-year inflation remains the same, up 2.6%. And up 2.6% was actually made some progress. When it was released mid-month, that was the lowest month-over-month one-year inflation going back to December of 2020 when it was at 2.5. But the 5 to 10-year inflation is sticky. It moves from 3.1 to 3.2. 3.2 equals where we were in November of last year. To find a higher number, get this, you have to go all the way back to June of 08 when it was 3.4. So that's most likely going to keep some of those lighter full-month reads on the sentiment under wraps a bit. And the long end, you got it right, Carl. The long end is a little squeamish here. It's at 440, down 4 on the week, where the 2s at 435 are up 4 on the week. 2s to 10s moving 8 basis points, as you could see on the week. Back to you, David.
All right, Rick. Thank you, Rick Santelli. Well, it has been a volatile week for the Mag 7 names. A winning week overall, though, for stocks. Mike Santoli, of course, tracking all of the action. Let's get over to him now as we wrap up this week. Mike.
Yeah, David, I mean, look, the Mag 7, first of all, a lot of differentiation among those stocks. Clearly, you see Alphabet really on the outs. It's got lowest ever relative valuation. And then you have things like Tesla getting a real jolt from the election sentiment and all the rest. They've done what they're supposed to do in terms of delivering results. In terms of all the operating cash flows and everything else, they're exceeding estimates. The issue is, and we sort of had this telegraphed, that earnings growth is less scarce. It's not as concentrated in these stocks. It's been broadening out, and therefore the market performance has been broadening out. If you look since the low from early August, after we had that little pullback, the average stock in the S&P 500, or the median stock, has doubled the performance of the Mag 7. So clearly, this is what people had wanted to see. You're seeing a little bit more of a all-inclusive market. This week, it somewhat mirrored that, although, I have to say, even outside the S&P 500, as we've discussed, a lot of the sort of high-energy moves are in even more speculative stuff, and it's less about delivering earnings today.
Yeah, and we spent a lot of time talking about that with Jim at the top of the last hour, Mike, as you put it, sort of the high-energy moves in more speculative names. I don't know if there's anything that history can show us here or what you think is causing it, but I'm certainly curious to hear your thoughts.
Yeah, I mean, clearly there is this sort of hot money flow that is mostly concentrated in crypto. I think the Bitcoin move is essentially the beacon of all of this, and it's creating this sense of just open-ended upside. There was definitely, after the election, a massive short squeeze, one of the best performing factors yesterday was heavily shorted telecom, media, and technology stocks. So you have all of these kind of offsides positioning and then just really active retail flows. You look at some of the double leverage or triple leveraged long ETFs, and they're surging in assets relative to the others. So everyone knows the year-end rally, the backdrop is favorable, and the play money is working in those parts of the market. Meanwhile, the big cap indexes are having these very sort of constructive and orderly uptrends and not really giving in to that kind of frothy action.
YOLO. I think that's the word you've used.
That's right.
Earlier today.
I belatedly have adopted that acronym, yes.
We'll see you next hour. Mike Santoli, thank you. Let's dig into the broader markets with a second Trump administration. How should investors best position trades within AI and tech? Our next guest examines trimming positions in Apple and Amazon and leaning further into NVIDIA and Tesla. Ben Snyder, Goldman Sachs senior U.S. equity strategist, joins us right here on set. Ben, welcome.
Good to be with you.
YOLO? Is this a YOLO, FOMO, frothy market to you, or is this exactly what you would expect given seasonality, given the fact that we just got through a presidential election, you got a red wave, and you have earnings continuing to power higher?
I think, before the election, the outlook looked really solid. We had good earnings growth. We're forecasting 11% earnings growth for next year. You have a Fed that is in the progress of a cutting cycle. That's a good backdrop. And the real question is, how much has that changed post-election? If I look at what the market is telling us it's incrementally more confident in the growth outlook.
Okay. So what are you confident in? What would you be buying in this market right now?
Well, one thing we've been focusing on is, of course, the extremely elevated degree of concentration in the market and relatively elevated valuation multiples compared to history. But if you pair that with a pretty good fundamental backdrop, as I was just discussing, there should still be very attractive pockets of the equity market for investors to look at. And for us, one interesting and overlooked pocket is mid-cap equities. You have this big group of stocks. They trade with very large market caps, very high profitability, and most investors have completely overlooked them. And the result of that is they trade almost exactly in line with their historical average valuation multiples.
So in terms of the tech trade, obviously we got NVIDIA earnings this week. That was seen as kind of a key catalyst one way or the other for the broader markets. Didn't really play out that way because even though it was a beat and raise quarter, it wasn't as strong as investors were hoping and the street was whispering. And yet we're poised for gains for the major averages. So what does that tell us about the concentration you just talked about and thus the rotation we're seeing?
I think it's very clear that the Mag 7 or the AI stocks, whatever group you want to look at, the earnings growth continues. But it's also clear that the acceleration in that growth seems to be slowing. And likewise, the beats that we're seeing every quarter, they're getting a little bit smaller every quarter. And so investors are asking themselves, what's the next part of the AI trade? And we've been focused on software. We are calling that phase 3 of the AI trade. Basically, so far, investors have been focused first on semiconductors, then on the broader infrastructure, what we call phase 2, including electrical utilities. And we think now it's time to start looking at phase 3, which is mostly the software companies that can use AI to generate revenues for themselves.
Although the move lately has been out of chips and into software. So is that story already well understood by the street?
I think it's starting to be understood. Just this week we published our quarterly analysis of position filings in the hedge fund universe. We looked at almost 800 hedge funds. And of course, we saw something we see almost every quarter, which is the Mag 7 are the most popular long positions. But what we also saw is, on average, funds shifted a little bit away from those stocks and towards software. And this was really the first quarter where we saw that move take place.
So you think there's more to go on that?
We think it's just the beginning of this trend.
We've been making jokes about the 12-month index projections. A lot of them are around 6,500 S&P. Is that sort of a standard, let's give it 10% because so much of policy right now is not clear? What's on the way?
There's certainly a lot of policy uncertainty. We're trying to work with what we have and where we have clarity. As I mentioned earlier, one place we have clarity is the health of the economy and the health of earnings growth. Even before the election, we were forecasting about 11% earnings growth for next year. That corresponds with about a 10 or 11% return. Right. That's how we got to 6,500.
So the question then is, what is a baseline China tariff, right? No one really knows, although some base cases are taking it to 60. Yeah?
Our base case is smaller than 60. We're assuming a 20% tariff. On the other end, we're expecting some modest tax cuts, perhaps some deregulation. When we put that all together, we think it nets out to not a major change for earnings, but of course we'll be watching the headlines like everyone else.
Well, mid-caps and small-caps have benefited as a result of the belief that there's going to be a lower tax rate domestically, right? I mean, can that continue to play out?
Yeah, mid-caps benefit from, as I said earlier, strong earnings growth. As you said, they're relatively insulated from tariffs because they tend to be more domestic-facing. And yes, they're more exposed to the U.S. economy. So if there's deregulation, tax cuts, other factors that boost U.S. growth, they should continue to outperform. But we'll have to see what policies are implemented in late January.
It's a lot of wait and see at this point, isn't it?
I think that's right.
Yeah.
The other thing, a note from you guys in the last few weeks, which we talked a lot about, was the longer-term look at maybe suppressed returns over a decade relative to prior decades because of that concentration, and Costin's talked about that. Has that view evolved in recent weeks at all?
When we're looking out over 10 years plus, it shouldn't change very much week to week. It hasn't changed very much week to week for us. Really, we're trying to think about the world in two different investment horizons, right? The first is, what does growth look like? What does policy look like? What does that mean for investors in 2025? When I look out 10 years, it's very hard to know what the next administration will even be. So we're really thinking more about where are valuations today, where is concentration today, and it's hard to argue with the fact that those are very high compared to history.
How do you game out the trajectory of rate cuts from the Fed? Because we've had quite a bit of Fed speak this week. Officials are tilting a little more hawkish or cautious looking to 2025. We've seen the backup in yield in the 2-year. What does that do to the equity picture, especially if you continue to see that move higher?
And so when it comes to equities, of course, rates are very important. But I think it's important to differentiate two questions. First, why are rates moving? Right, if it turns out that yields are moving higher or the Fed is cutting less because the economy is very healthy, that's a fine backdrop for stocks. If it turns out it's because of concerns about the deficit or concerns about inflation, that's a different story. But right now, that doesn't seem to be the case. It seems more that the economy is running at a healthy rate. And the question is, how much does the Fed really need to cut against that backdrop?
I guess we'll find out. Ben Snyder, thanks for joining us. Well, as we head to break, here's our roadmap for the rest of the hour. The very latest on President-elect Trump's possible Treasury pick. We'll head live to West Palm Beach.
Plus, Bitcoin hits new all-time highs and crypto-related names continue to be on the move. We're going to be continuing to track all of that action.
Shaping up to be a big weekend for the box office with the release of Wicked and Gladiator 2, or Glicked as Liquid, as they've talked about. We'll talk to the CEO of IMAX, Rich Gelfond. A big show ahead as Squawk on the Street continues.
Stripe helps many of the world's most influential companies grow their revenue and build a more profitable business. Whether it's Hertz, making checkout a smooth ride for their customers, OpenAI, answering unprecedented demand, or PGA, chipping away at back-office inefficiency, Stripe's financial infrastructure platform helps companies achieve ambitious goals. No matter what success looks like for your business, Stripe helps ensure the complexity of financial systems doesn't get in your way. Learn more at stripe.com.
There are lots of people you might want to share a Vrbo with, but the host isn't one of them. When you book a Vrbo, the host doesn't stay with you. So the only people you'll share the space with are your people. Vrbo Private Vacation Rentals. Relax. You booked a Vrbo.
And now, a next-level moment from AT&T Business. Say you've sent out a gigantic shipment of pillows, and they need to be there in time for International Sleep Day. You've got AT&T 5G, so you're fully confident. But the vendor isn't responding, and International Sleep Day is tomorrow. Luckily, AT&T 5G lets you deal with any issues with ease, so the pillows will get delivered and everyone can sleep soundly, especially you. AT&T 5G requires a compatible plan and device. 5G is not available everywhere. See att.com/5G for you for details.
Welcome back to Squawk on the Street. The president-elect naming some more picks to his top team. But we're, of course, waiting on Treasury. Our Megan Cassell is in West Palm Beach with the very latest this hour. Hey, Megan.
Hey, Carl, that's right. Still a lot of moving pieces down here, but at least one new name becoming official overnight. Trump announcing that he would tap Pam Bondi, the former Attorney General of Florida, to be his next pick to lead the Justice Department. And Bondi is about as loyal as they come in Trump world. She was part of his impeachment defense in 2020, then later that year part of the team that tried to overturn those election results. But it goes back further than that. As Florida's Attorney General back in 2013, she declined to take on a case involving Trump University. Her office had received about $2 dozen complaints about it. Aides said that she was considering it. Then she took in about a $25,000 campaign donation from Trump and then decided not to join the case. Now, both sides do deny any quid pro quo there, but it shows you just how far back their relationship goes. And we will see if any of that comes up in her confirmation process. Her nomination, of course, coming out just a few hours after Matt Gaetz, Trump's first pick for Attorney General, withdrew his own name from consideration. Gaetz was always likely to have trouble getting confirmed by the Senate. And after spending the day meeting with senators, he said that his nomination appeared to be proving a distraction and that there was no time in this transition for what he called a needlessly protracted Washington scuffle. So, guys, Gaetz out, Bondi in, and amidst all of that, as you said, we continue to wait for a Treasury Secretary. We also continue to think that the short list we've been talking about all week remains the short list of contenders that Trump is considering. But we also know that he was meant to have wrapped up interviews with those four on Wednesday. It's why we thought the pick was imminent yesterday. So the longer that time goes on, guys, the more and more speculation we keep hearing that Trump might not be satisfied with any of those picks, and the search might have to broaden even further. Guys?
As we discussed yesterday, the other good story right now, Megyn, is Doge. We've had the op-ed by Ramaswamy and Musk. Now we're going to get these Doge casts where they're going to talk about it on YouTube. And now this element of Marjorie Taylor Greene cooperating with the commission through House oversight. What do we know about that?
Absolutely. I think one point to make a note of on that committee is that it's part of House oversight, not part of House appropriations, which of course controls more of the funding. I think that's one sign that some folks I was talking to, including our Emily Wilkins, who pointed out that that shows it might be more for show than it is meant to have any real authority. But of course, the oversight committee can, of course, call people to the Hill and talk to them about it. So what we do know, Carl, is that this is going to be a big fight. And in that op-ed, I thought it was so interesting how they said that the law was on their side, they believed, but they also believed that the Supreme Court was on their side in all of this. So while some people say they wouldn't have the authority to do anything, they argue that they might have to take this to the courts, and they think that they'll win. Something to watch.
Megyn, thank you. Keep an eye out for anybody going in and out of Mar-a-Lago who's potentially going to be the next Treasury Secretary. Megyn Casella.
You bet.
Down there in Palm Beach. The stock market's up about 3% since the election. Confidence surging beyond stocks. Senior economics reporter Steve Leisman's here. He's got more on what that means. Steve?
Hey, David, several recent regional Fed surveys registering a surge in economic optimism that shows post-election enthusiasm among businesses is not limited just to Wall Street, but it also comes with a rise in a gauge of policy uncertainty that could limit how much real economic gains come from that optimism. Take a look here. The Philly Fed Manufacturing Survey's outlook, that is 6 months down the road for business conditions, rising 20 points to 56.6. That's the highest level since 2021, even while the assessment of current conditions remains pretty depressed. The Kansas City Fed's 6-month outlook jumping 4 points to its highest level since January. And the New York Fed's Empire State Survey shows an unprecedented 43-point surge in the current conditions. That's the biggest gain since the pandemic. These gains in manufacturing optimism can be linked to increases in new orders for capital goods, not one for one, but a pretty good match there, which is a proxy for business investment. It has been lackluster, by the way, the past several years, might be set for an upturn here. The regional Fed surveys were conducted largely after the election and suggest the optimism over potential tax cuts and deregulation that has gripped Wall Street, also capturing the imagination of leaders in the manufacturing sector. It could also coincide with a bottoming of the manufacturing sector as well. But rise in economic policy uncertainty could limit the real economic effects. A measure of this uncertainty from the universities of Stanford and Chicago, drawn from newspaper articles, shows an increase in uncertainty likely linked to the unknowns of the Trump administration's tariff policies, together with a lack of clarity on taxes and deficits. The gains in optimism, they highlight a challenge for the Trump administration, which has generated great hope among investors and business leaders. Also has to deliver, though, on the hopes of the low-income and working-class Americans who shifted towards Republicans and ultimately won President-elect Trump the election. Guys?
I want to go back to this idea that maybe the industrial part of the economy, which we know has been basically in recession, could be bottoming, could be turning. What do we need to be watching so closely to see that that's actually being realized?
I think the order, good question, by the way, Morgan. The orders for capital investment are one thing to watch as well. These surveys, I think what we find when we look at this post-election surge, Morgan, are going to have a partisan aspect to them. So you want to be a little careful to see that this surge in optimism remains and watch the actual policies that come and watch that uncertainty index, because on the one hand, you can say, hey, good stuff is coming. And I think maybe it could be a good time to make an investment. But if you don't know when it's coming, how it's coming, that's going to limit the kind of calculations for some of these big investments that are going to kind of move the needle. Also, we've had a big surge into the tech investment. And the question is whether or not some of the more sort of old line investment ideas, if they start to get some traction there, Morgan.
All right. This is great insights, as always, Steve. We've got Martin Marietta Materials CEO Ward Nye on Closing Bell Overtime later today. So tends to be an early indicator of some of this industrial activity and these big projects coming to fruition. So we'll have to ask him these questions. All right. Well, still to come, we're tracking Bitcoin. That's nearing the $100,000 level. That's up around 40% in the month of November alone. We're going to take a closer look. That's next.
Shouldn't every vacation be a rewarding experience? Vrbo certainly thinks so. Which is why, on top of host-free stays and 24/7 support, Vrbo now offers One Key rewards. With One Key, you'll earn rewards on eligible stays that can be used for even more stays. One Key, that's something the other guys don't have. Make your next vacation a little more rewarding. Vrbo Private Vacation Rentals. Relax, you booked a Vrbo.
At JPMorgan Chase, we help increase economic opportunities for the people of Greater Dallas-Fort Worth, helping them gain skills for in-demand careers at our company and throughout the region. That's why we're here, to help make careers happen. Learn more at jpmorganchase.com/DFW.
The thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years.
That was MicroStrategy's Michael Saylor, of course, responding to Citron Research short position in the company. The stock rebounding, as you see a bit. It did drop 16% yesterday. Of course, it has been on an amazing tear all year and certainly since the election. And behind Bitcoin's big surge as well, hitting all-time highs. Moved up a lot more, in fact, than Bitcoin has during that period. Dom Chu is back at HQ. And there's been so many different moves in crypto and crypto-related names, haven't there, Dom?
It's been crazy just how volatile things have been so far. But just to kind of emphasize your point here about MicroStrategy, the roller coaster ride has really been mostly to the upside, especially over the course of just the last few weeks here, especially since the election. Over the last year, a 722% gain. But for the better part of the year, you can see it was kind of just moving between a channel here. But MicroStrategy, very indicative of that leverage to the Bitcoin trade. Now, the reason why Bitcoin is such a big focus, as you guys have been pointing out, is the record highs. And just to kind of give you an idea, it's at 98,480 right now. The high watermark we did hit was right around 99,525 earlier today. So we were less than $500 away from hitting that six-figure mark, the 100,000 move here. And by the way, from a market cap perspective, you were talking about a $730 billion market cap a year ago. And right now, that market cap, according to data from CoinMarketCap, currently stands at $1.95 trillion for that Bitcoin ecosystem overall. So Bitcoin prices nearly $2 trillion. And of course, since the election is where we've seen most of the action so far. So if you take a look at some of the names within that Bitcoin ecosystem, the names levered to it, names like Coinbase, Mara Holdings, Robinhood, Riot Platforms, all since the election up between anywhere from 20 to 55%. Coin has been the real outperformer, Carl, there. So as the adoption picks up, as more chatter picks up about deregulation in cryptocurrencies and maybe even more further regulation of certain aspects of it, keep an eye on some of those names, Carl. I'll send things back over to you.
All right, Tom, thank you very much. Dominic Chu getting some SCOTUS decisions today out of D.C. Let's get to Eamon Jabbers on that. Hey, Eamon.
That's right. We've got an interesting and unusual ruling here from the Supreme Court in a case involving Facebook and, of course, Meta. The ruling here is that a case involving Facebook is now dismissed as improvidently granted. And what that means is the Supreme Court is saying, in retrospect, we never should have taken this case in the first place. That means that a lower court ruling will stand from the Ninth Circuit here in this case. And that would seem to be bad news for Facebook. How bad? That's some nuance and up for interpretation. We're waiting for Facebook to comment. They don't have a comment ready just yet. But this case was all about the Cambridge Analytica scandal back in the last decade, Carl. And the question here was whether or not Facebook was fair to investors in its disclosures in SEC filings about risk factors that it faced. If it knew that there was a certain risk that had already occurred and only disclosed that risk as a possible hypothetical when speaking to investors, but knowing that it was an actual real situation that had already happened, was that fair to investors? In that case, they're facing shareholder lawsuits around that. It went all the way up to the Supreme Court and now back down again. The Supreme Court taking a pass here on making a decision. So Facebook called the Ninth Circuit ruling extreme at the time that the ruling happened, saying that it opens up companies to sort of rearview mirror lawsuits saying that they should have disclosed X and Y risks, which they should have known about in the past. We'll see what Facebook has to say about this decision from the Supreme Court here. But, Carl, the Supreme Court taking a pass now on a Facebook case at the highest court. Back over to you.
Interesting. What a week it's been for social. You got this part. There's this bill in Australia, Eamon, that would, if passed, ban social media for kids under 16. You had Adam Mosseri of Meta yesterday talk about Threads trying to respond to Blue Sky, emphasizing less on the algorithm and more on the actual people you follow. But on this one, I do wonder what you think some of the broader implications may be.
Well, I mean, if you're another company looking at this and you're filing reports with the SEC, the question is how much do you have to change what your filings say about known risk factors as you go forward? And do you have to disclose things that you might not have disclosed in the past? I think a lot of lawyers are going to burn a lot of billable hours right now looking at this ruling from the Ninth Circuit, trying to decide what it means for them in terms of anything they know about a negative factor that has impacted their company and whether they have to disclose that or not. I think there's going to be a lot of wiggle room here and a lot of room for interpretation. But spinning forward, Carl, you look at this incoming Trump administration and what its policies will be toward big tech. And you can imagine a world where things get very different for big tech in Washington in months and years to come.
Eamon Javers, thank you.
You bet.
Well, want to bring your attention to the latest space flight, the 9th human space flight, commercial human space flight by Blue Origin with its New Shepard suborbital vehicle. Countdown is happening right now. And it's going to carry a 6-person crew just past the edge of space, past the Kármán line. This is going to be a 10 to 11-minute suborbital trip. There's going to be weightlessness. They're going to see the curvature of the Earth. This is the 28th launch of Blue Origin's New Shepard vehicle overall. And as I mentioned, this is the 9th space tourism mission. So that is West Texas on your screen. Let's listen into this countdown.
5, 4, command engine start. 2, 1, ignition.
Cleared the tower and is heading to space. Follow along with us on your screen. We have velocity picking up. We're
six-person crew, including Emily Calandrelli, who's known as the Space Gal. She's a best-selling author, science communicator, has hosted a number of shows. You also have some repeat Blue Origin customers on board as well, which speaks to perhaps the appeal of traveling to the edge of space. And of course, this is the latest mission, as I just mentioned, for Jeff Bezos' Blue Origin, which has a number of other projects underway as well, including its orbital semi-reusable rocket, New Glenn, which is still pushing towards possibly a first launch before the end of this year. And just earlier this week, Blue Origin and SpaceX both getting awarded new contracts by NASA for their lunar lander projects as well. So just keep an eye on that. This is going to be about a 10-minute flight past the edge of space. And it's the latest in this commercial space evolution, this era that we talk so much about.
Paying passengers on here?
Paying passengers.
Okay.
We don't know how much they're paying, but they are paying.
Speaking of SpaceX anyway, after that heavy launch this week, the comments about another 400 maybe launches in the next 4 years, we're going to get used to this stuff.
We have gotten some very ambitious comments from Gwen Shotwell, the president and COO of SpaceX, perhaps unsurprisingly. This is, of course, how Elon Musk's companies operate. They put these very ambitious forecasts out there. Maybe they hit them on time, maybe they don't, but at some point they typically do. And I think that's the thing to watch when you're talking about DOGE and the policy implications and the deficit implications, because taking that approach, that lean and mean, move fast approach, disruptive approach to government is going to be very interesting to watch.
Meanwhile, losing some of the opening gains, Dow's up 190. Curve is now higher across the board after we got those better than expected PMIs and that elevated number on University of Michigan 5-year inflation expectations up to 3.2. Back in a moment.
Welcome back. I'm Silvana Henao with your CNBC News Update. The State Department issued a health alert today for U.S. citizens traveling in Vang Vieng, Laos, after a 6th person died from drinking tainted alcohol. An American tourist is among the victims, but U.S. officials have not confirmed his identity. It's not clear yet where the methanol-laced drinks came from. Local police say a number of people have been detained in the case, but no charges have been filed yet. The ex-girlfriend of former Marvel actor Jonathan Majors dropped a civil lawsuit accusing him of assault and defamation. She filed the suit shortly after Majors' conviction last December on 2 counts of misdemeanor assault for attacking her in the back seat of an SUV. According to a court filing, the civil suit was dismissed with prejudice. And former Philadelphia Eagles center Jason Kelce is taking his talents to late-night TV. He will host a They Call It Late Night with Jason Kelce on ESPN starting in January. ESPN says the show, which starts at 1 a.m., will be filmed in front of a live audience on Friday nights in Philadelphia, Morgan.
All right, I'm sure there'll be viewers for that. Silvana, thank you. You got it. President-elect Trump's pick for Energy Secretary Chris Wright has to make some major moves before officially joining the cabinet. Pippa Stevens joins us now to explain. Pippa.
Hey, Morgan. Well, this is not the first time a president-elect has tapped an executive for a cabinet position, but it can be complicated because these individuals often own assets that are a conflict of interest. So in order to ease the blow of going from the private to public sector, you're allowed to defer capital gains taxes on the assets that you're required to divest. In the case of Liberty Energy CEO Chris Wright, who is the nominee for Energy Secretary, he owns 2.2 million shares of the company, worth roughly $39.2 million, according to data from Equilar. Now, once the U.S. Office of Government Ethics decides what he needs to sell, he'll be issued a certificate of divestiture, allowing him to roll those taxes. He'll have 90 days to sell his stock and then 60 days to reinvest the proceeds if he wants to take advantage of the tax deferral. There are restrictions around what he can buy, with 3 choices: a blind trust, diversified mutual funds, or U.S. Treasuries. When those assets are sold, he'll have to pay capital gains on that sale as well as the prior sale. Now, he does also own about $13.1 million worth of restricted and performance shares that have not yet vested, which he will most likely have to forfeit. Carl?
It's important to keep note of as we have an administration that's going to rely heavily on private sector. Thank you very much, Pippa Stevens.
BGC trading down 4% on similar dynamics with Howard Lutnick over there as well.
Yeah, Apollo shares, by the way, we should point out, have rebounded a bit as Rowan's chances seem to decline, perhaps. But I did note, I mean, if he were to leave, there's a lot of stock that he owns there. So that would actually be potentially market moving, not to mention he's led an entire revamp of their strategy.
Yeah.
Yeah.
The other Trump trades.
Yeah, exactly.
We'll keep our eye. Obviously, Street wants that Treasury name as soon as possible. Still to come this morning, it is a big weekend ahead for the movie industry, with Wicked and Gladiator 2 out this weekend, hoping to recapture the magic of Barbenheimer. We'll talk with the chief of IMAX in a moment. Don't go away.
Take a look at shares of Amazon up slightly. The company announcing this morning that it is investing another $4 billion in the AI startup Anthropic. That is the company behind the Claude chatbot. It was founded by OpenAI research executives, or former executives of OpenAI. The new funding brings the tech giant's total investment to $8 billion, though Amazon is still going to retain its position as a minority investor.
All right, well, let's get to Kate Rooney with a news alert. Kate.
Hey, Morgan. So I just got off the phone with Dan Gallagher. He is the former SEC commissioner. He is Robinhood's chief legal officer right now, and he has been rumored as Trump's pick for new SEC chair. He spoke for the first time on the record about those rumors. He told me he's not going to take that role. Quote, he told me, I have made it clear to the relevant people that I am not interested in being considered for the role. He said the way things are going at Robinhood, they're hitting their stride. Robinhood, he said, is now enjoying some good times. They've also been through some tough times, but the company's been performing, and analysts on Wall Street are seeing it and giving it some credit. The stock's up about 30% in the past month or so. Says he can have more of an impact on financial markets from within Robinhood in some ways than he could if he went back to the SEC. Says he hopes that he would also have a big voice when it comes to some of those market structure issues through this administration. Was bullish on whoever the new SEC chair is. Gary Gensler, the current SEC chair, said yesterday he was going to step down on January 20th. Widely regarded as sort of an enemy of crypto, issued Robinhood a Wells notice, also sued Coinbase. Robinhood shares, I mentioned, up about 30%. There has been this hope that there's a less hostile environment when it comes to the SEC. It might let them ship products faster. On the SEC appointment, finally, he jokes that kind of like having a friend who buys a boat, every name that has been floated as someone he likes and respects and has worked with. He said it's going to be hard for them to go wrong with the names that he has floated out there, whether that's folks like Paul Atkins, you have Bob Stebbins, Matt Andreessen, who worked at Citadel. But that is the latest, guys. Back to you.
So, I mean, he was very much, this is very newsy for folks that are tracking this, particularly in the crypto world, Kate, because he was really seen as like the name that was being floated around for SEC.
Yeah.
So what is your sense of others that might be on that short list, especially if he's removing himself from the situation?
Yeah, Morgan, it was interesting. We interviewed Vlad Tenev, the CEO of Robinhood. He described Dan Gallagher as the crypto king this week. So there was a lot of hope that he might be in that chair. The hope among some of the crypto crowd out there in terms of the new SEC chair, even if it isn't somebody who comes directly from that industry, is that looser regulation, basically anybody but Gary Gensler would be seen as bullish. And there's also been huge impact from some of the funding. If you look at Gary Gensler's social media right now, you'll see it right away. I mean, he's getting slammed by some of the people who supported, whether it's House members or donated to Trump on being sort of single issue crypto voters. There's a lot of people that supported that. So anyone else in the SEC, I think, is seen as good news at this point.
Okay, Kate Rooney, thanks for bringing us that breaking news. Up next, it's shaping up to be a big weekend at the box office. Wicked and Gladiator 2, hoping to recapture the magic of Barbenheimer. We're going to speak with the CEO of IMAX to find out what he's expecting. Stay with us.
Just wanted to clarify something we reported earlier on Reddit, citing a report that had the Newhouse family, which owns about 7.8 million shares, selling that stock. Latest reports we have are that they're not actually selling. They will use the shares for a new credit facility that they will use to obviously take in some funds and borrow against those shares, but no actual selling. You can see some weakness after an incredible run, Carl, for Reddit shares over the last few weeks.
Meanwhile, it's a big weekend ahead for the box office as Gladiator 2 and Wicked hit theaters. The anticipated big box office weekend is coined Glicked by fans, and in the year ahead, IMAX expects to deliver a record $1.2 billion at the global box office in 2025. Rich Gelfand, IMAX CEO, joins us here on set. Talk about what's in store for the weekend on a stock, Rich, we're already looking, has been crushing it so far this year.
Yeah, it's been a good time, and I think there are two reasons. One, I think the narrative around theatrical in general has been a lot better. Premium has been better. Everybody thought streaming was the answer to everything, right? You were going to lock yourself in your house, chain yourself to the couch, and what a shock. It didn't turn out that way.
Well, I remember during COVID when you were having to think about what happens if we don't exit this in a while, right? What other toys can we bring in safely? That's all a distant memory.
Yeah, actually, That might have been a different guess, Carl. I was a real believer in theatrical, and I thought, COVID, you're locked in your house. Guess what? You're going to watch in your house. But once you're allowed out again, and that's not only proven true for movies, but you look at concerts, sporting events, races. People came out with a bang, and this weekend is really, we're going to see some of the culmination of that.
Yeah, what's on the line for the quarter mostly? Because we're trying to catch up here, right, on Q4 box office overall?
We are. The quarter didn't start that strong overall, but I think this weekend is going to be big. But what's even more interesting to me is what comes. So they're whispering numbers like 200 million domestic box office for this weekend, but I'll go out on a limb and I'll say next weekend is going to be bigger, because in addition to these two, you have now Gladiator and Wicked. Next weekend you have Moana, which is one of Disney's biggest movies of all time. So you have all three of those on a global basis, and I think a lot of records are going to be shattered.
How does this position us for 2025? I mean, there had been a lot of talk last year with the strikes and the freeze on content being created that you were going to see an elongated cycle. Is the expectation that things that maybe got delayed through that process a year ago now come to fruition next year?
I think that's what's starting to happen even now, because I think they probably wouldn't have planned 3 blockbusters of this type at the same time. Usually they would have spread them out. But for 25, as Carl alluded to, we guided to a much larger box office than this year. And that's because so many films that were in the queue, whether it's Formula One or whether there's 3 Marvel movies or Tom Cruise's next movie, Mission Impossible 8, the new Superman coming out. I mean, I can't even remember all of them. And in IMAX, we've got 14 movies that we've actually filmed with IMAX cameras, which is about double that we've ever had in our history. So I see this Thanksgiving as kind of the on-ramp for 2025. And I think one reason all of the stocks, and ours included, have done well is people aren't only looking at the next few weekends. It's an insight into 25. And 26 is even more crazy. At the end of 25, you have Avatar, which will play into 26. In 26, you've got the Avengers, the new Chris Nolan movie, Dune 3.
Star Wars?
Star Wars. Yeah, what kind of year can you forget Star Wars? I mean,
wow. I can't remember the last time we brought you on, Rich, where your stock price was up 60+%. It's been a lot of years you've been coming on. How long have you been CEO of this company?
31 years.
30. Has this been the best performance you've seen in a year of the stock?
I don't know.
You're at a 5-year high.
But I do remember, David, years, we're talking back, we're the only ones still alive from then.
Well, 31 years is exactly how long I've been here. That's how long you've been CEO.
But I remember I'd come on and you'd say, oh, it's a good story, but when's the stock going to move?
Yes,
and I'm happy to be back today and say it's happening now.
It really is. Do you think you can sustain that given what you just outlined in terms of the upcoming schedule, so to speak, for 25 and 26?
I mean, I do. Literally, when you forget Star Wars or you forget Avatar, it's really crazy.
Well, David did a great interview with Ben Affleck last week, and part of the discussion was about AI not infringing on the art, but maybe the process, the production. You can bang out another season of a show or maybe another film.
Cameron says this
I wonder if you think the schedule can accelerate safely given costs.
So I'll give you a related anecdote. I was on the set of the new Star Wars Mandalorian, and they're thinking about how to use AI. But what's interesting is they have a library of like 10 films with outtakes and all of that data. And if you put in the computer lightsaber, you have so many looks of so many. So I do think, especially for some of these franchises, that AI is going to make a big difference to them.
I wonder if that means we're entering a sweet spot, potentially, if the promise of AI is realized. Because James Cameron came on, as he's filming Avatar on Closing Bell Overtime a couple months ago and said the same thing. And for these big budget, blockbuster expected movies, if you can do more with less, as you can continue to drive sales at the box office and in the theater, whether this is now going to be a golden age in terms of profitability.
I do think so, but I'll put an asterisk on it, Morgan. Every new innovation you think is going to save money. I think it'll create more content and more opportunities, but somehow Hollywood always finds new ways to spend money. So on the other one, I'll leave that out.
It's like when you get a raise, the life stays the same. You just spend more.
Right. You don't even know.
Like the government.
Rich, we can't wait for this weekend. Good to see you.
Thank you,
Rich
Carl.
Gelfand.
Our live market coverage right here continues. Have a great weekend, everybody.
All opinions expressed by the Squawk on the Street participants are solely their opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by them on television, radio, internet, or another medium. You should not treat any opinion expressed on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of an opinion. Such opinions are based upon information Squawk on the Street participants consider reliable, but neither CNBC nor its affiliates and/or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Squawk on the Street disclaimer, please visit cnbc.com/Squawk on the Street disclaimer.
There are lots of people you might want to share a Vrbo with. You may want to do a romantic getaway, enjoy a beach house with friends, or book a trip for the whole family. But one person you'll never want to share your stay with is the host. When you book a Vrbo, the host doesn't stay with you, so the only people you'll share the space with are your people. Vrbo Private Vacation Rentals. Relax, you booked a Vrbo.
Your best hotel in Bethesda has every guest raving. How do you make every hotel like your best hotel? Your best plant in Atlanta employs 4,500 people. How do you get 4,500 people working at peak efficiency? Your best data center in Redmond has optimized every drop of water. How do you make every data center the pinnacle of sustainability? The answer is Ecolab. Ecolab, bringing out the best in your business.
As a global leader in alternatives today, PGIM is capturing the potential of tomorrow. So as you look to diversify your portfolio, PGIM offers expertise in seeding, developing, and managing a broad range of liquid and illiquid strategies. With over $320 billion in alts across public and private markets, we are helping clients achieve their long-term goals. PGIM, our investments shape tomorrow, today.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures fairly steady despite some surprisingly weak macro coming out of Europe. The private sector there falling into contraction. Euro's at a 2-year low. Meantime, inflows to U.S. stocks now up 7 straight weeks. Our roadmap begins with the winning week for the Street. Some mega cap tech names, NVIDIA, Meta, and Alphabet, however, pointing to some lower opens.
Plus, we continue to watch that so-called Trump trade. This as we await further insight into the president-elect's economic team, specifically who's going to run Treasury.
Oh, I told you that.
Meantime, a stark warning from Citadel's Ken Griffin, at least when it comes to tariffs. And retail's holiday expectations. Gap shares are surging this morning. It is seeing some strong demand for the big holiday season.
Let's begin with what has been an eventful week for the markets. Nice note out of Goldman today. Jim, looking at flows, 7 straight weeks of inflows to U.S., 8 straight weeks of outflows out of Europe.
Look, I'm not as negative on Europe as others, but I will say that, look, our markets are in a strange boat. Every single morning between 3 and 4 a.m., there's this potential short. Just endlessly, I just get up.
Today you asked if it was the rain.
Right. Well, I mean, because there is obviously nothing to it. It's based on nothing. I mean, it's 7 p.m. to 3 a.m. There's really not a lot happening. There's a boring football game on or whatever. And I come in and I say, well, what are they? Let's see. What do they have? What do the shorts have? And I used to joke with David. They say 90 to 95 about the money over the transom. And it used to just come on Mondays. Now it seems to come every day. And it gets right into the market. So you're sitting there thinking, wow, that's a negative story. Oh, Jesus, Ross Stores. Ross Stores, you know, the numbers weren't so great. Williams-Sonoma, numbers really great. But you know what? They go up so much because there's a short base again. Where did this short base come from? Who's doing it?
I don't know, Jim. I don't know.
But I imagine you're grateful for it.
I think that it's the cushion. I think it's a trampoline. I think that when I see most of the stories that I'm not talking about Rocket Labs, I'm not talking about Joby. I'm saying that the average stock has a short base that is shocking to me. It'd be like 2%, 4%, 6%. And they panic immediately because they don't get their way because there's just no real collapse in stock. I'm talking about stocks like Upstart, Affirm. I mean, today there was another patented piece about how Affirm raising from 50 to 90. You see these every day. You see the analysts capitulating. There were so many analysts who were betting that so many stocks were going to collapse, and Carl, they didn't. And now people are scrambling because they thought the companies were jokes. Look, is Rocket Lab... Elton John came up with this a long time ago, Rocket Lab. And now, what's a good example?
Wrote the words, but yes.
AppLovin's a real company.
It's a real company. It's got a more than $100 billion market
that's
value.
What I'm saying. How's
and it's
that right?
been moving up, by the way. I mean, man.
But that's nothing
it's a hedge fund
anymore.
manager named Josh Resnick who's benefited enormously at Jericho. He's done a great job on that name. But the AppLovins of the world, the Reddits,
yes,
the MicroStrategies.
Oh, yeah, Mr. Recall, MSTR.
All right, but they have been moving. I mean, there's a memification thing going on
Thank
here,
you.
Jim.
And that's where I was going.
The Amazons, the Metas, certainly not the Alphabet. But not moving Apple's.
No.
Since the so-called Trump trade seems to be much more focused in these kinds of names.
Well, there's a lot of buying of companies that sound like they're good companies, and that people believe. And the best example of that is anything nuclear. And the people who make nuclear in this country, they're adamant that it's a 2032 issue. But the American people, who's ever doing this buying, they think that those people are wrong and that it's going to be far more immediate. But those people are very good people who are in the nuclear industry, and they just tell me, Jim, don't get me. One of them told me, Jim, don't get so excited. Don't get so excited. I am an excitable fellow, I admit that. But I said some things that were very positive about nuclear, and the person said, Jim, it's 2032.
Yeah,
Stop it.
Small modular reactors.
Right.
Everything I've read about it indicates you're talking 5 to 7 years before.
But what do you make about the fact that people don't care? They'll buy them. They'll just buy them.
What do I make of it? They're getting excited by the prospect of it. I don't know if they're discounting future cash flows back
something that's
10 years from now, Jim.
I'm telling you something more existential. It has to do with what Carl started at the beginning, which is that the wave of money finds itself in mysterious places. It finds itself, obviously, in Bitcoin. But it finds itself in these stocks that I hear on my lightning round. Where last night at Rocket Lab, I just said, enough, it's going higher. I never used to say that. I don't want to fight the wall of money that flows into this market.
Is it worrisome at all to you? I don't want to say that these names are overly speculative. Many of them are decently, or if not very good businesses. That said, they're getting pushed to levels. I mean, MicroStrategy is its own thing. Saylor was on Squawk Box this morning. Right. Interesting interview. It used to trade basically at the value of its Bitcoin. Now it trades at 3 times that.
Well, I'm just wondering that we don't have, maybe we have this $3 trillion umbrella that is NVIDIA, Apple, Microsoft. If you have a $3 trillion company, maybe we have to readjust our thinking. Maybe $100 billion is not a big company.
Kind of is the subject of a nice note out of B of A today. Hartnett looks at NDX relative to SPX. It's holding its secular 2000 high. His argument is if it cracks, then you would see some rotation out of this U.S. exceptionalism trade. There's a look at that name, that relative performance.
I like that, but...
So, wait, what is that showing us, Carl?
This is relative NDX to SPX.
Okay.
You see the high back in the dot-com boom.
Yep.
We've held above it.
Right.
Hartnett's point is if that were to crack, then some of these U.S. raw trades might get a second look.
I see.
What do you think of that?
That's your area of expertise, along with so many others.
Okay, I'm going to give you my expertise. If you take a look at the stock of NVIDIA, which we all think is an unbelievably good stock.
Oh, we think it's an unbelievably good company.
Right. Okay, so...
I'll allow you to say it's an unbelievably good stock.
A year ago, the stock looked like it was selling it at 50 times forward earnings. Okay. It turned out to be selling at 20 times earnings because NVIDIA far exceeded what anyone thought it could do. So you could have bought that stock at 20 times earnings last year. You could have bought it at 18 times earnings before the big ramp in May. And we sit here and we think, what an overvalued stock. It turned out to be undervalued.
Right.
It turned out to be radically undervalued versus the S&P, versus General Mills. Doesn't that show you that?
Okay, but that is a unique, perhaps once in a lifetime kind of move, increase in earnings. I mean, they came into 23. Analysts were expecting like 20-something billion in earnings. They did 60.
But I'm saying that if that's able to do that, maybe we are being too negative. That NVIDIA, the greatest story of all time, arguably, turned out to be very cheap. That's not supposed to be. That means that maybe.
And as a result, every other name is cheap?
No,
AppLovin is cheap.
Reddit
is cheap.
Can I finish? No, people say, I want the next NVIDIA. And it might be Reddit. Maybe it's AppLovin. That's all that's happening. And who am I to squelch?
I'll tell you who you are. You're a guy who's been on TV yapping about this stuff for 20-something years. You ran a hedge fund.
26.
And on and on. And I can easily see you sitting here in 10 minutes and saying these things are all completely hot air.
Well, no, I'm saying that those are two different things. There's a dichotomy, okay? There are people who say, I want the next NVIDIA at $3.5 trillion, and there are companies that could be the next NVIDIA. But people are not discerning. They are saying, you know what? Maybe Joby is for real.
First of all, there's not going to be another NVIDIA.
How many do you think there are?
There's only one.
There are many people who buy lottery tickets every single day.
Oh, so now we're playing the lottery.
Really? Joby. We're into flying cars. Why not?
Okay.
And we know what the total addressable market
All right.
be.
Look, there's a person. I'm going to tell you a wild story.
Really?
Do you know that there's a man who has maybe the largest supercomputer in the world in Tennessee?
I do,
and
actually.
he spent a fortune on NVIDIA chips.
I know a lot about that,
Maybe
yes.
tens of billions of dollars.
No, not tens of billions. Yeah, not yet.
Hundreds.
No. He's going to spend $10 billion.
And he's developing.
On chips. Yeah,
I'm going to make David live. He's developing humanoids. How crazy is that? David, I'm saying that the crazy stuff is paying off in many humanoids. Right. Elon Musk is developing humanoids. There's two billionaires fighting against each other, right? In tweets.
Bezos and Musk, you're talking about.
And these guys, and I want a piece of that.
I'll tell you one thing.
Everyone wants a piece of the action, David.
Two of the most important magazine covers of the week did not go to the president-elect. Cover of Time and the cover of The Economist. I think we have both feature Elon Musk.
Well, look, I mean, he dreams big, and it turns out that some of them pay off, so people want the next one. But best performing stock in the S&P. All right, this is a good example. Is what stock that you constantly say is overvalued. Constantly. Palantir. Number one.
Wait, I never say that at all. Why are you...
It's a device. Will you let me have this device? Jeez, you know, were you ever in a play? Oh my God! Did you ever go out in high school?
I was the Artful Dodger and Oliver in 6th grade.
Okay, I was Lieutenant Rooney in Arsenic and Old Lace. Let me tell you, wow! Listen to me, okay?
Maybe one other play. Yeah. All right, go ahead. Sorry. Of course.
You have stocks like that. You have these stocks, and you just say, I'm going to be in them. I'm going to be in one. I want to own the next one. And it turns out that there is a next one.
All right, but that also could be a very bad strategy, Jim.
Well, another thing that's happened is that there's a dichotomy of portfolios. They want to be in these S&P portfolios because they're told that you're a knucklehead if you're not, but they also want to make a little money beyond that. And I think that's fine. And I'm not going to say they're wrong. That's my point, David. I'm not going to say they're wrong.
I mean, I do this all the time to you, but you wrote a book. The title is Get Rich Carefully.
Right.
And in the book, you always say 20% gains. Don't be afraid of ringing the register.
Right. Well,
we're looking at gains well above that.
You want to take some off. Yes.
Do you
want
think
to take
that would
some
ever
off.
stop him from saying the exact opposite?
Oh, don't do that. I mean, I'm mercurial, but I'm not that arbitrary. Palantir is a great example. What the hell is it doing at 63? And you know what the average person says? You're right. Why isn't it at 120? That's what the person says. I am not going to go against our viewers and say, when I say it's absurd that it's a 61, and they say, yeah, why isn't it?
What's going to change this current emotional period, so to speak?
What's going to change it?
Yeah.
If rates go up dramatically, I think it changes, but they have to go up dramatically.
Dramatically from here.
But I think something new has happened. I think that the people like Alex Karp has figured out a way to get a new shareholder base. It's the base that just says, I am the man. I'm part of the man.
Diamond hands.
Yeah, but how is this not very similar to that period of time as well?
Okay. Let's say you had that skeptical attitude, to quote Will Frost, at 20, at 30, at 40, at 50, at 60, at 70, at 80, at 90. You think it's not? You think it's at 60? So it's a little more expensive at 90. And Alex Karp will come on and he'll tell you my stock's worth $1,000. There's a guy named Ron Barrett. He's a serious professional, and he will use any price target he wants.
I know, but I'm
anyone
sure
he wants.
David could also counter with AMC at 390, now at 5.
Well, you had to get out when the getting was good there.
There you go. You had to get out when the getting was good, okay? And that's where all this is going. At some point, this story will change.
Listen to me. Adam Aaron came on in the 50s and said, I'm selling. That's called a wake-up call. Alex Karp's probably buying.
Didn't he buy a gold mine or something?
Yes, he did.
It's probably a bad sign.
Helion or something. Yeah. I don't know. Let me get Alex Karp on the phone. Not that he ever take my call.
No, he'll never take it.
We're going to talk some box office ahead of a busy weekend for the movie business.
Yeah,
when we come back, also the latest on the Trump transition and this search for a Treasury Secretary. Take a look at the pre-market. So many names to get to as well, including retail. We'll get to Gap, Ross Stores, Intuit, Tapestry, and more in a minute.
What does it take to design and deliver a corporate strategy with confidence? How will you drive long-term value by understanding the risks and rewards within a challenging geopolitical environment? EY Parthenon has 10,000 strategists with deep sector knowledge, backed by the real-world experience of the EY Global Network that can help. Start your journey with us at ey.com/US/EY Parthenon.
If bonds are back today, why wait for tomorrow? At PGIM, our fixed income strategies help investors uncover hidden value and unlock opportunities. Whether you're looking to enhance your income or diversify your portfolio, our broad range of strategies bring together local expertise and deep credit research to help you achieve your long-term goals. PGIM, our investments shape tomorrow, today.
And now a next level moment from AT&T Business. Say you're a mattress magnate getting ready to open a new store. You need fast internet that's easy, like bada bing, bada boom. So you get AT&T Internet Air for Business. And business is a booming. You're making sales. You're video chatting with customers. You're grabbing those online orders. You're slinging sleep. All on their reliable network. Set it and get on with your business today. AT&T Internet Air for Business. Available nationwide. Visit att.com/biz Internet Air.
Let's talk some Trump transition this morning. According to the Journal, the president-elect has floated the idea of choosing former Fed Governor Kevin Warsh to serve as Treasury Secretary, with the understanding that he could later be nominated to lead the Fed. A key issue for Trump's Treasury pick is enacting his aggressive tariff policy. But Citadel's Ken Griffin this week offered a stark warning about those policies at the Economic Club of New York.
I am gravely concerned that the rise of tariffs puts us on a slippery slope towards cronyism capital. We know this from the history of economics. Those same companies that enjoy that momentary sugar rush of having their competitors removed from the battlefield soon become complacent, soon take for granted their newfound economic superiority. And frankly, they become less competitive on both the world stage and less competitive at meeting the needs of the American consumer.
By the way, he also said that an activist, FTC and DOJ have taken a bite out of U.S. competitiveness.
Well, they really have. Look, the history is clear. The Smoot-Hawley tariff was it came at the same time as it was precipitant to the Great Depression. We all know that tariffs are historically bad in terms of for world commerce. I do think that I have been a fair trader for many years, not a free trader, because free trade didn't work for us. So I'm not against tariffs, depending on whether you're trying to dump steel in our country to wreck our steel industry. You have to look what's been dumped. The Chinese bringing electric cars, I don't want them coming in. I do want our own electric cars. I'm trying to preserve. We want to preserve some industries.
But I thought it was an interesting point. I mean, the one that is being made more often, of course, is it will be inflationary, the tariffs.
Very much. Very much.
But I thought it was interesting that Griffin went to crony capitalism and the idea that conceivably you will make a lot of our companies less competitive because they will simply come to rely on the fact that everything else is being kept out of our market.
Well, that's how you get a banana republic.
Yeah, right. And I thought that was interesting.
No, Ken Griffin's right. I mean, he's definitely right. It
was an interesting take. And by the way, then when it does come to Treasury, Roger Altman, I thought on Squawk Box earlier, did a good job of outlining the challenges that will face whoever it is who takes over the Treasury job, given tariffs, tax policy that conceivably will grow the deficit. And not to mention a deportation policy, which we still don't really know any details on in terms of how many people conceivably will be sent off.
good quarter. You have a kind of well, it could happen again. It's just it's not happening yet. How about that? And if you want to tell people take your basis out, that's what I'll do. Look at SoFi. SoFi's a good example. Out at that Ritz-Carlton in Santa. Stock was at 6, and I basically said to
Yeah.
And he said, my company not only not a joke, but we're going to do this, we're going to do this, we're going to do this. Who is terrific in turning Twitter.
CFO of the NFL.
And the NFL. Analyst during the dot-com boom.
So if you suspended your view and you listened to Anthony and you bought the stock, you got a double.
So you think back to new highs at 26?
No. Because that was when it was over enthusiastic, but not back to new lows at 5. And I think that if that stock went to 20, I would tell people, guys, you got to take something off the table. I can't do it yet because it's got a word that David is going to criticize me for because it says, be careful, David. It has momentum.
Mm-hmm. Well, that's what you seem to be discussing this morning, really. You're just talking about not getting in the way.
I think Warner Brothers Discovery has momentum.
Not
Have you
this
seen the
morning.
momentum of that stuff?
Not this morning.
Well, there's an evening.
But you're right. As we talk about the spinoff of our own company, along with any number of other cable networks from Comcast stock has reacted a bit to that. But the big winner lately has been good old Warner Brothers Discovery.
Right.
Which is, take a look at, there's Comcast, our parent company. Take a look at 1 month on WBD, because it's up from the mid-7s. Look at that.
Look at that.
36% move.
About. If you bought that stock, you're really happy, and now you're going to find the next Warner Brothers Discovery. This is money. You cash that out, you get $10. It's not like you only get 7. What?
There's a couple of things here I would note. One is that, there is, I talked to John Malone a few weeks back. I want to try and share some of his thoughts about it because he still owns 18 plus million shares of this company. But frankly, he's eclipsed by a guy I mentioned earlier, by Jericho, which is a hedge fund that's been focused on TMT for many years, has had an incredible year because of their ownership of AppLovin. But their last 13F showed them, Jericho owning, I think they're the 8th largest holder now, owning 22.4 million shares. Maybe they've even been buying more. What is the reasoning behind it? I'll go to Malone, and you can at least hear.
Yeah,
I got a little something from our interview a few weeks back on sort of Netflix and Warner Brothers Discovery and what he certainly hopes will happen. Take a listen.
The number one attribute I thought Discovery brought to the table was international presence. Discovery had worked very hard to develop relationships internationally. Pretty much every country on the planet in local language, with local content, with local sports, on multiple channels. And if you were going to introduce new programming, entertainment programming, the Warner Brothers guys historically had licensed their programming to anybody who wanted to buy it internationally. So Warner Brothers had no real opportunity to launch an international service because all their content, all their important content is tied up and was tied up for years in advance.
So, certainly he sees an opportunity for international. What I wanted to actually show you guys as well was EBITDA of Netflix and EBITDA of Warner Brothers Discovery. This is very similar. Revenues, very similar. And yet, obviously, you've got one that's valued at 12 times the other. And
well,
Malone's
maybe Warner
point
Brothers
was
studio. Maybe it's worth $70 billion. Warner
sometimes you
Brothers
need to be
studio.
really patient, and if you can stabilize the revenue stream, you don't even have to grow it; just stabilize it. Things are looking different.
And if they take Max International, I mean, look, I'm totally. Look, you've taught me to study Malone, and Malone's right. If Zaslav were to blow out International, this stock deserves to be appreciably higher.
Malone may be right, maybe not, but he has not been right. I mean, this, as I said to him during our interview, it's been a disaster.
I know, and
I mean, you know.
Well, if you bought SoFi at 24, you were wrong. If you bought SoFi at 6, you were right.
Yeah.
I think that this company, he's right. This internet, you blow out Max, you add a couple channels to it, you do some sports. Holy cow.
Well,
anyway, there's no debt that comes due till 27 on this
No, it's had a very nice move, Carl, heading into the end of the year after being down as much as 30-40% at some point.
Yeah, what's interesting about if you chart WBD against, say, the 10-year, it's been able to look past this little pop-up in rates because of the prospect of better M&A.
No, and this thing could be self-fulfilling. If the stock goes up, it's a virtuous circle up.
That's a good point as well.
And then people start thinking, well, listen, it's not going to go under. Maybe it's real. Maybe I got to get on board. Maybe I should offer programming. Maybe I would be part of it. And then it becomes the ticket.
Yeah. On M&A front, Jim, love to run. Honeywell, they're selling their personal protective equipment unit. That
was announced, though.
That's right. That's not what Elliott's looking for. That's not.
No.
I mean, let's not forget, by the way, largest activist position of all time. That was last week's news. I don't want to forget it. Over $5 billion.
That's why we held on to it for the Charitable Trust, even though
obviously
the last 2 quarters were very disappointing.
Don't have any updates on where things stand there, but they clearly want them to pursue a true split.
Well, I mean, they look at RTX and look at the wealth created. It's very similar, and I understand that Vimal Kapoor, he just started. I mean, so you could argue give him some more time, but Elliott's not going to give him more time. Elliott's on the move.
Yeah, between Starbucks, Southwest, and this. I mean, a lot of pots boiling.
They have been quite active.
Right, and as always, rigorous. When you sit down, you look at what they have to say about Honeywell. It makes a lot of sense. I've always felt
Texas
that what you have to
Instruments
do
is another one. They have really,
I think you have to do.
Very busy this year.
Take a look at what happened to Salesforce when Mark invited these people in. Mark Benioff. Happy birthday to Lynn Benioff, 50 years old.
By the way, CRM, best Dow name over 3 months.
Yeah. Now, I think you should look at that chart of CRM. This is a person. This company was shouted at, gave a shout out. Jensen shouted them out on his call, saying that they've got the right kind of agent. And
you're a believer in agent force?
Absolutely. And David, I'm going to give you a word that I think is going to sum up what you need to be thinking about, and I need you to get involved. Agentic.
Yes, I knew you were going with that. You used that yesterday, agentic.
I know, but people are just catching on.
And we're all going to right in the enterprise.
Well, and
then eventually we're all going to have.
Salesforce is about trying to. When you see the ads, the McConaughey and I'm told Woody Harrelson. From first season, that wasn't first season, right?
True Detective, that one you mean? Yeah, they're gonna.
Yeah,
they're gonna be together now. What? I don't know.
I'm hearing.
Really?
I'm hearing that could happen.
Okay.
Might be even being filmed right now.
Or will it simply be a humanoid replica of Woody Harrelson?
No, I'm thinking that Woody Harrelson might be. I don't know. I don't want to put that out. That's just speculation, like Kevin Warsh. It's the same kind of thing. But look at that stock. And that was Mark Benioff called in the activist. Remember what I told you about the activist?
Yes.
Please stop calling me, Mark, as opposed to he never returns my call. Would you please stop calling me? I get a call from you every day. That you actually did that. And Dan Senior, who is, I think, one of the he's fun.
Dan, at Elliott.
Yeah. Like he was,
Well, I mean,
Mark was sending him emojis in the middle of the night. Hey, think about this.
Mason Morfin from Value Act, one on the board. Obviously, Jeff Smith kind of started it all off.
He was a little
publicly.
He was a little blown away by Mark's embrace.
It worked out well.
Yeah. But that's what you have to do in Elliott.
Now, what do you make of Benioff continuing to come after Microsoft and its Copilot?
You mean like last night?
Almost every day.
Every day. No, not
Satya
almost
Nadella
every day.
was on our air earlier this week with John Ford, obviously defending Copilot and what it can do for people in the enterprise and the efficiencies that it can introduce.
I've told Mark that the great thing about Microsoft is they pivot. It could get better. I don't want to go against Microsoft. They have a lot of smart people there. It could get better. Right now, it does not seem to be attracting a lot of. It seemed very hot. It came out hot.
Yeah.
And now it's not hot. That's true. But then it's going to be
It is the laggard this year of the big seven, right?
Well, the AI PC has been a bit of a bust. It did not turn out to be what I thought it would be. I thought it would be a Christmas gift. It's not really working. Now we'll hear from Best Buy, and JP Morgan goes down and reiterates that Best Buy it's going to have a bad quarter, but people are going to like it. Wow, that's a bad chart.
Low 400 since July.
Yeah.
It really.
I'm going to give you a for the ages chart, and you'll never forget it. It's the easiest thing for you to remember in the world. And I want the chart put up. It defines this moment. It's a company called Dave. Digital banking system company. Let's see the chart of Dave. And this is what's going on. This is banking applications, okay? This is like build products for AppLovin. This is an AppLovin for banks.
Okay.
Dave. Okay, so then when you go home, I want you to be thinking, you know what? I want to find the next Dave.
Oh, my. You did that, huh? You went there.
What? I didn't give Dave and Buster.
No.
I gave Dave.
Stock's up 1,400%.
Right. Well, that's what I want you to understand. People are looking for the next Dave. And who is going to fault them? I happen to have Dave right here.
You got me right here. Always.
Right.
Yeah.
But
I don't like Dave, but that's okay.
Well, I'm looking for Ross. And I found it. Ross Stores.
Yes.
What?
Nothing. Well done.
Thank you very much.
You're welcome.
Thank you. Don Rickles was always one of my favorites.
Yes, as he should be.
I thought Dangerfield was good in
I'm going to come back to the biggest companies. Alphabet shares are down again. I don't know if it's the antitrust case or it's also this story that has OpenAI potentially trying to introduce a browser and just continue to come with features that conceivably threaten Google's
that's just
monopoly in search.
That's journalists trying to knock a stock down, like they tried to knock Alphabet. They tried to. Oh, it's the information. Remember, they wrote the story.
They have a lot of very good journalists.
Okay,
there.
Listen to me.
I don't understand what your
issues are. I don't care. They did a story about Blackwell running hot.
Yes, I know. You've taken personal offense to this
Yes,
story.
I did.
I know.
Yes, I did take personal offense. Because that story was a lie.
I don't know about that, and they do good work there. I'll defend them a bit. I could care less, but I'm just saying.
Dave, Ross, the work was bad on that. Now, maybe they do good work all the time, but that was bad work, and it got people out of the stock needlessly. I say own it, don't trade it. And I wore in honor of, because I knew he was going to do that, my cufflinks that are NVIDIA.
Oh, your dog.
Yeah. My dog NVIDIA. Answer to NVIDIA was as long as you had a T-bone steak in your hands. But I will point out...
What was the dog's actual name?
Everest. But I told you, I do think that story about Run Hot was a shame, and Michael Dell would have told you it was wrong, and I didn't talk to Superior Micro because that's more of a problematic situation. I'm sure HPE would have told you it's wrong, but you can't refute a story a few days before your report. You're not allowed to talk.
And what was the information supposed to do? Wait till earnings and then publish?
It wasn't true, though.
Well,
it wasn't true.
This is what the company says. Yes.
Well, I've worked hard to try to find why it was late because of heat when it wasn't late and there was no heat. So it was problematic. Now, it wasn't as bad as Muddy Waters taking apart ELF.
I'm not gonna.
Well, no, I just think that if I were there, I ran TheStreet.com, I would put out a piece saying, you know what, I didn't get this one right. And that would make me a more credible organization. That's what credible organizations.
Reddit shares are down, guys. Only about 7%. The Newhouse family selling some stock, perhaps as much as 7.8 million shares offered.
That's a chance to get in. That is a chance to get in a company that is Huffman's doing. You buy that stock. Okay, buy that stock. This is one of the great stories. It hasn't had a break since that last quarter. Steve Huffman is a fantastic exec, and I've got to tell you, you have to train your model using Reddit.
Right. It is used by many of the large language models. They use it to train. And
it's fantastic.
Real-world interactions with people.
By the way, Reddit is part and parcel of what I was talking about, like the Palantir situation.
Go to Reddit. Well, we mentioned at the very top of the show.
I'm just saying that there's a new kind of investor, new kind of trader investor.
Yeah.
And you know what? They also, they'll saw you and say, listen, did you buy Bitcoin? I mean, you think you're so hot with your shooting me down? Did you buy Bitcoin? Alex Karp, Bitcoin, Reddit. I mean, these are all part of the same piece, which is suspend your judgment for a little bit and buy NVIDIA at 50 times earnings, and it turned out you bought it at 20. Reddit, I was pushing Reddit when it came public because I spent a lot of time with Huffman. And I said, this guy is so
Is your next book going to be called Suspend Your Judgment by Jim Cramer?
No. All right.
Buy everything at any price. It doesn't matter.
No, so you can take your basis out. No.
You want to re-rate everything. The stock market should be re-rated because of essentially what one company is doing.
Okay, I will say that if you read the conference call, this is the third one in a row, that if you read the conference, NVIDIA was a $500 billion company 18 months ago. And it's a $3.5 trillion. So
yes, that captures people's imagination.
Yes,
As
I'm saying that it's not 2000. The companies are like Rocket Lab has actual revenues. Okay, it may actually turn up and have an inflection quarter. I'm just saying that you must. Oh, NVIDIA's down. Oh, no. I've heard people say, oh, my God, NVIDIA, you got me in NVIDIA. Thanks for nothing. But I'm just saying, I suspend your judgment was incorrect. What I mean to say is that Rocket Lab, when you look at it, turns out to have real revenues and a nice revenue ramp and a real good business model and a visionary CEO. So it's entirely possible that could be it could be, I don't want to say SpaceX.
No, it's important. People don't want a repeat of 2000. We do not want a repeat.
They don't even want a repeat of a lot of those names, like a firm coming out of 21 into 22 and 23. Now, obviously, you had rates, you had a very different market then, but
no, but
they don't want that either, Jim.
He's real. There's an 8% short position on a firm.
You can be real, but you also can be realistic.
And he's making a lot of money. And his credit rating is much better than banks. I'm not fighting a firm, is what I'm saying. I'm not fighting it. One day I will fight it. I don't need to fight it yet.
Well, the street's in your corner today, Jim. Dow's up almost 300.
I mean, who was shorting it? When I was at 3 a.m., you saw my post.
Yes, I did.
It was actually
first thing I saw.
It was 3:20 a.m. And I said, "Who is shorting this market? What kind of knucklehead?" And I said, "Oh, maybe because it's raining.
It's raining.
Maybe that's why they're shorting it."
The macro has not been as constructive in Europe, and now it's our turn. Let's get to Rick Santelli. Morning, Rick.
Yes, data matters. 9:45, market on your charts. Look at stocks move higher, rates move higher because S&P Global PMIs are moving higher. If we look at manufacturing, still under 50, the fifth consecutive month under 50, but at 48.8, it's sequentially higher and actually the best since July of this year. Now let's get to the meat here. Services, zooming up to 57. It's a 22nd consecutive reading above 50, and this one is the best since March of 22. And if we look at the composite, obviously affected in a positive way by the strong services side, it's at 55.3. That is the best read since April of 22 and also the 22nd consecutive reading above 50. We see interest rates moving up. If you look at a 2-year right now at 4.35, it's unchanged on the day and it's up 4 on the week. If we look at 10s at 4.41, it's -1 on the day, -3 on the week, and it's the 9th consecutive session that 4.41 has been in the range. One other thing, bond yields about ready to close at a 1-month low yield. Why? 11 basis point range, super weak German GDP. Squawk on the Street will return after a short break.
What a week it's been. Take a look at some week-to-date gainers on the NDX. You'll see some software in there. We mentioned media, but at the top it is SMCI on the heels of that new auditor and this plan to avoid delisting, up 82% on the week. 5960 S&P as we got green arrows this morning on just about every sector. Stop Trading with Jim is coming up next. It's time for Jim and Stop Trading.
I was too glib. There are stocks that I said I can't fight that I will fight. But one I won't fight is a company called Kyndryl, KD. This was a spin-off of IBM run by Martin Schroeder, the very reliable former CFO of IBM. And this company was a terrible company when he got it. It's a consulting company. He's turned it around, and now it was losing a lot of money, and now it's making a lot of money. He announced a buyback last night, and I know that stock looks like it's expensive, but if you go a long-term chart, you'll see it came public at a very high price, then it lost a lot, and now it's back. And I don't want to fight Kyndryl. Because Martin Schroeder did a good
chat with
job.
Martin on your show last night.
Yeah, and he's a terrific one, and that was a really good, fantastic turn. Congratulations to Martin.
You play this weekend, yeah?
Yeah, we got a Sunday night game. Stafford. It's going to be a very good game, very competitive.
Let's hope Devontae plays.
Yes, exactly. Yep. Missed 2 practices, and I want everyone to watch it. NBC. Great coverage.
We'll see you tonight, Jim. Mad Money, 6 p.m. Eastern Time. Nice gains for a Friday. Dow's at 315. Don't go anywhere.
When booking with other vacation rental apps sounds like this.
This place doesn't look like the pictures.
Come on, the doors are on back.
What the? Is there a door behind all those spiders?
It's time to try one that sounds more like a vacation.
Look at how many spiders there aren't.
Where should we lie down for 8 consecutive hours first?
Relax. You booked a Vrbo.
This message comes from Apollo. In the financial landscape, change is the only constant. Apollo is rethinking assumptions and crafting the solutions that the future demands. At Apollo, they think it through, then they think it new.
I'm Gunjan Banerjee, lead writer for markets here at the Wall Street Journal.
And I'm Teles Demos. I write for the Journal's Heard on the Street column. This is WSJ's Take on the Week, the show where we give you a leg up on the world of money and investing. That's the stuff that we think and talk about every day here at the Wall Street Journal. And every week, we're going to bring you into those conversations. They're going to be with insiders. They're going to be about markets, the economy, and finance.
And for today's show, we're going to dive into big tech stocks and artificial intelligence, and of course, what's been the splashiest event of earnings season, NVIDIA, which reports in just a few days. We chatted with a really big AI bull, Dom Rizzo. He's a tech portfolio manager at T. Rowe Price, and he shared with us why he thinks AI is the biggest productivity enhancer since electricity.
Electricity, that's a big one. I use that.
I'd say so. And which companies specifically he thinks could be some of AI's unexpected winners. You're going to hear that conversation in just a few minutes. Before that, though, let's get to what's been happening in the news and in markets. There's been a ton going on with crypto, and we have some upcoming earnings from Target and Walmart. But first, we're about 2 weeks post the U.S. presidential election, and the Trump trade still seems to be on everyone's minds. Tell us, what do you think? Do you think it's already losing steam?
Well, first, let's break down what is the Trump trade, right? The Trump trade really comes down to 2 big macro moves, and that's stock prices are up and bond yields are up. So let's talk about bonds. Yields on 10-year treasuries are still much higher than they were 3 months ago. 3 months ago, they were under 4%. Now they're flirting with 4.5%. There was a surge on November 6th. That didn't quite continue. They've been a little up and down from there, but they're still up. And why are treasuries part of this Trump trade? Well, on the good side, because faster economic growth generally means that the Fed is going to have to raise rates in the long term. But on the bad side, people are worried about how tax cuts, Trump promised a lot of cuts, how those things might impact the deficit, and a wider deficit means the government is just going to have to keep selling more and more treasuries, supply and demand. Those yields go up. So, Gunjan, tell me about what's been happening with the stock market. Has that trade started to lose any steam as well?
You know, it's so interesting. Throughout the week, the biggest question investors posed to me over the phone was, when will the volatility that we're seeing in treasuries in the bond market, when and if will that start to stir volatility in the stock market, right? Because
of course, everything's connected.
It is. And investors are constantly making this calculation of, should I put my money in super safe treasuries and government bonds, or do I take a riskier bet and put it into the stock market?
And treasuries have been tempting. Those high yields mean you get paid a lot to own them.
Right. So there's this ongoing trade-off there. But at the same time, so far at least, those higher yields have not caused anyone to panic. But I do think it's something a lot of people are keeping an eye on. And those higher yields also haven't dampened a lot of the euphoria out there in markets. You know, I think things have been a little bit more range-bound in recent sessions and maybe even ticking lower as opposed to right after the election where you saw this crazy move up. But what I'm seeing in positioning data, what I'm hearing from investors is they are still kind of positioning for this year-end melt up and for this rally to continue.
Melt up.
Melt up.
I've heard of meltdowns, melt ups.
Could be exciting. And, my favorite indicator of stock market euphoria has been flashing bright green. Tell us, guess what it is?
Gunjan, knowing you, it's got to be something in the world of options, right? It's got to be something.
You make me sound like such a nerd.
Well, in the very best way, Gunjan, you are a huge nerd. So tell me, it's got to be something related to that, right?
It's tied to options, but also a stock. Guess which stock?
Well, if it's options on a stock, let's see. I know NVIDIA's reporting this week. That's a big options name, right?
It's close. NVIDIA is the new Tesla, a lot of people say. And Tesla call options are my absolute favorite market indicator of how bullish or bearish people are at any given moment. And what we've seen is activity in this market has totally exploded since the election. People are piling into these trades, betting that Tesla's rally is going to keep going. The stock is going to keep rising after it hit the $1 trillion mark, or at least its market cap crossed the $1 trillion mark recently. There is one big caveat here, of course, and that is that investors might be getting ahead of themselves in terms of what the Trump trade even is.
Well, it sounds like they've cut the brakes on the electric car of the stock market in what you're saying. So I'm not surprised to hear that.
Well, as one investor said to me this week, people are pricing in all the good stuff, none of the potentially bad stuff. For example, threats of tariffs really weighed on stocks at times during Trump's last administration. And James McIntosh at The Journal had a great column on this recently where he pointed out that some of the Trump trades after the 2016 election quickly faded.
Well, I take James's point, and he's always worth reading on topics like that. But I do want to talk about one thing that looks like there's just unabated bullishness, and that's crypto. That has surged after the election. Digital assets are off the charts right now.
It's been crazy.
Bitcoin prices hit $90,000 for the first time last week. Dogecoin has doubled. And the rally accelerated after Trump announced that Vivek Ramaswamy and Elon Musk would lead his, listen carefully, Department of Government Efficiency.
Doge. Is everything a meme now? Seriously, is everything a meme now?
Well, some stocks are memes. Coinbase shares at one point were up more than 50% in November, and MicroStrategy, the tech company that owns a lot of Bitcoin, they were up more than a third so far this month, the last time I looked at it. So yes, those are memes too.
I know, and I think people are betting it's going to continue.
They've clearly got the stage. The question is, what are they going to want from it? I'm going to be watching that very closely.
It's a good time to be a crypto bro. Well, we should, and we'll chat way more about this in a future episode.
Gunjan, we just relaunched the show. We can't just keep promising people episodes about stuff. We're still getting the hang of it.
Well, we want people to come back and listen, don't we?
Yes, we certainly do.
But I think perhaps it seemed like the big issue for the election, even more so than crypto really, was the economy and how people felt about the economy. That really seemed to push voters toward Trump, who was making a huge case that he was going to bring inflation down. He was going to, bring jobs back to America, boost manufacturing here. And in terms of inflation, I keep wondering, are we done talking about it? Because everyday Americans are still very concerned about it, but I wonder how much investors are paying attention to it now. What do you think?
Well, we flagged Target and Walmart's earnings, and here's why I think they'll be interesting for a couple of reasons. One is I think people will be listening to those calls like they have started to listen to many calls for any comments about the impact of tariffs. Tariffs will impact the supply chains potentially for people who sell you stuff in stores. Will they make any comments about their margins or pricing? Target and Walmart have both been lowering prices on a lot of stuff lately. So one way the inflation story could continue to be part of the conversation is if tariffs start to bleed into the prices of things that you might buy at a Walmart or a Target.
It's just so tough to see how that's going to shake out, right? I don't know. I feel like a lot of stock investors were really caught off guard by the tariffs in President Trump's last term, where his tweets on tariffs would drive these huge moves in the stock market. So it seems like something that's tough for investors to prepare for. But there's also just the consumer mood, and I think that's going to be really interesting to watch in terms of Walmart and Target's earnings. I know lately I've been splurging a little less. The past 2 years I was kind of on a travel spree after the pandemic, and it's been calming down for me. I'm taking a closer look at how much some of these hotels cost.
Well, you're not alone in that. And if you look at indicators and things generally related to people doing that, like really big time travel, luxury spending, some of those things have been slowing, right? We've been looking at American Express's results, and their spending volume growth has slowed a little bit. And that's one place, of course, people look for spending on travel. But I think that because the consumer is overall still pretty strong, they have lots of money in their checkbook, they have a job, their wage growth has often outpaced inflation. The question is whether or not people are going to be spending a little bit more on things that might be travel, but might still be things they don't absolutely need.
I don't know about you, but I'm a big knockoff buyer. I will buy the Walgreens brand. Anyway, the biggest thing, of course, we have coming this week is NVIDIA earnings. And we talked to Dom Rizzo, who's a tech portfolio manager at T. Rowe Price, about the chipmaker, AI investment, and tech stocks. We're going to get to that after the break.
This message comes from Apollo. In the financial landscape, change is the only constant. Apollo is rethinking assumptions and crafting the solutions that the future demands. At Apollo, they think it through, then they think it new.
So tell us, NVIDIA reports earnings later this week, and before the presidential election took over everything, artificial intelligence was really the theme that dominated the market for more than a year. And the champion of that trade was NVIDIA. They sell the specialized chips that power all of these complex computations needed to realize AI. And as of November, NVIDIA was worth more than $3.6 trillion, making it the most valuable company on planet Earth.
Yeah, that is an absolutely wild number to me. I mean, just for context, that is 3 Berkshire Hathaways,
Insane.
Which is itself a pretty big company, right? But Gunjan, am I right to also say that there's some skepticism about the AI boom that's been kind of setting in the market this fall, right? You follow volatility in the market so closely, and it seemed like it was really on display in the aftermath of the earnings reports of a couple of those big tech companies that have invested heavily, and I mean heavily, to the tune of tens of billions of dollars heavily, in AI products. And that's, for example, Microsoft and Meta platforms, right? Meta being the parent company of Facebook, Instagram, et cetera. Those both fell sharply after their earnings. But then again, they've bounced back since, so maybe I'm just kind of going on about nothing.
My reporting suggests that you are picking up on something real. I sense some wariness when I talk to investors about the AI trade. At the same time, I think a lot of people are almost afraid to bet against it. But we have the perfect person here to help us unpack all of this. Dom Rizzo is a portfolio manager at T. Rowe Price, and he manages a fund with all of the big tech names, including NVIDIA, which is his number 1 largest holding. Dom, thank you so much for joining us today.
Thanks for having me, guys.
So there's a lot to talk about here with individual stocks, valuations, and all that. But let's zoom out a little bit. Last time you and I chatted around a month ago, you seemed pretty bullish on AI. Tell us why.
Well, look, I think AI has the potential to be the biggest productivity enhancer for the global economy since electricity. And what do I mean when I say that, right? Well, if you take a step back and you look at what electricity did to the global economy, it added roughly 1% a year of GDP for 32 years. The question is, can AI beat that? And I think the answer is yes. We're starting to see productivity enhancing elements to companies already. We're starting to see it in earnings reports. And just look at what the Mag 7 are spending on CapEx. They clearly believe it also. This is existential for them to win. So I think this AI boom can continue from here.
So you mentioned those investments. I mean, we are talking very serious numbers here, right? Microsoft has spent $53 billion this year through the third quarter. That's about 28% of their revenue over that time frame. Alphabet's CapEx was up 62% in the third quarter over the same time last year. So these numbers are big and growing. But for all that, kind of call it AI power grid that's being built here, some of the big society-changing things that we've been talking about with AI, like 4-day work weeks because you can get everything done much faster with ChatGPT. Hyper-intelligent robots that drive your car and do your housework. Heck, even just like a decent customer service bot. Those things still seem far away. So when will all this AI investment turn into equally huge revenue-generating products?
Yeah, well, that's the nature of seismic change, right? We always overestimate what it can do on a 1-year basis and then underestimate what it impacts society on a 10-year basis. Because it just takes time to go put in AI native applications in order to have AI be the biggest productivity enhancer for the global economy since electricity, you really need to believe in a world of AI agents, right? Versus just co-pilots. And just to give everyone a quick definition, co-pilots, humans are in the loop. AI agents, humans are not in the loop. And so you're directing those agents to go do things on your behalf. Take a company like T-Route. You could have thousands of digital employees doing things upon your behalf. But these numbers, like you said, are monstrous, right? Let's put them in perspective. Amazon, Google, Meta, Microsoft, 2023 spent $154 billion of CapEx.
But as an investor, so you own all of these stocks or a lot of these tech stocks. How many more quarters or years of spending are you willing to withstand before you kind of throw in the towel and say, hey, it's too much?
Well, I think we're starting to see the revenue growth come through. And this is something that I think people probably underestimate because it's hard to point to specifics. But I'll give you some anecdotes, and maybe that can satisfy a little bit of what people are looking for. So if we go back a year and we said, hey, what do most people think Meta is going to grow in Q4 of 2024? That number was in the low to mid single digits, right? We just got their guidance a few weeks ago. And that number, according to them, is going to be anywhere from 12 to 20% growth. Meta, historically a conservative guider. It wouldn't surprise me if we were at the upper end of that range. Let's look at Microsoft, right? Let's look at Azure growth. AI for their entire business is their fastest business ever to $10 billion of ARR, annual recurring revenue. It just happened in 2 years. Moreover, Azure itself with AI is growing 33%. Without AI is only growing 21%. And then there's a plethora of companies that have reported so far this quarter, ServiceNow, HubSpot, AppLovin, just to name a few, that specifically called out AI as driving accelerating revenue growth.
So it sounds like what you're saying is that we don't need necessarily to get to, total revolution in life to have success in these investments. And I see what you're saying there. I mean, that frankly, that kind of appeals, right? It's like an AI trade that maybe isn't as exciting as some people might hope, but like it's maybe kind of a boring and maybe in some ways less risky AI trade, right? And that sort of appeals to me that there are kind of products coming out now that are going to be successes enough to justify that spending.
And they're making money. They're making money right now.
And that's the big difference between now and the internet boom, right? If we think about compare and contrast 1999 versus today. Well, number one, a lot of the 1999 and 2000 fiber build out was built with debt, right? Build it and they will come. On the other hand, today, this is funded by the cash flows of the most profitable companies in history, right? So very different setup just from a capital markets perspective.
NVIDIA is a really good example of that. And, that brings me to my next question, which is we have this really big earnings report coming up. A lot of these other companies are spending on NVIDIA's chips. Is this the one report that really matters?
Well, NVIDIA's earnings is always a blockbuster event to keep the 90s analogies going, right? But I don't know if we've seen the stock move too much into the print to see how it'll react. But we just saw what Jensen said a few weeks ago, that Blackwell demand is absolutely insane right now.
That's Jensen Huang. He's CEO of NVIDIA. And Blackwell is a signature product for NVIDIA, right?
Yes, the signature new product, right? And that doesn't surprise me because the benefits of investing in the new chips are just so beneficial when you compare it to the old chips in terms of training the next new model, right? And there's training spend and there's inference spend. And the training spend is what really requires the most leading edge, bleeding edge technology. So we'll see what ends up happening on the print. But if you take a 18 to 24 month view, which is what I try to do in my strategy, I don't see this AI CapEx spend slowing. Well, actually, mathematically, it has to slow. I don't think it stops anytime soon. You can't spend at these growth rates forever. You have to decelerate. But I think that we can see very high orders of magnitude as we go from an AI chip market of $45 billion in 2023 to $400 billion by 2027 and $500 billion by 2028.
Are there companies out there that you think of as attractive AI plays, but that investors right now don't think of as AI plays. I'm thinking of, say, retailers or banks.
Yeah, a banker told me the other day that that's the biggest thing that they're looking at in their business over the next couple of years.
Well, I think it's going to just be part of every single business, right? It's like saying having an app or an internet web page is a differentiator. I actually don't know if it's going to be a differentiator for normal companies over time. I think the question is AI a sustaining innovation? Does it make the big companies stronger? Or is it a disruptive innovation, right? Do smaller companies with lower cost structures and different ways of doing business, are they able to enter the market and be able to take a lot of share from the traditional companies?
So you think other stocks could kind of power some sort of an echo boom or second wave for this whole AI trade?
I think it has to in order for the AI wave to continue, right? You need the revenue growth acceleration for the rest of the market in order to happen. You can't just rely on a CapEx cycle forever. But I think there's plenty of innovations and applications turning up that will justify the continued spend beyond just the Mag 7.
Well, let's get back to the elephant in the AI room, and really in every room, in every conversation now, and that is the Republican victory. So what do we think might be on President Trump's potential agenda, Dom, that could really impact AI supply, demand in a positive or negative way?
What does that mean for the overall economy? That probably means a few things. Lower taxes and deregulation for businesses, but it also means tariffs on products coming in from outside the U.S., right? And if you think about all these different business leaders all around the world, they didn't know where they were going to go build that next new factory, right? Did we build it in Vietnam? Did we build it in China? Did we build it in India? Or did we build it in the U.S.? I think the answer is very clearly and robustly now is probably in the U.S. going forward. Now, with regards to AI specifically, like I said, I think that we have animal spirits in terms of CapEx buildouts. I think that's going to probably mean more power buildout in the U.S., which you need for AI to continue.
You mean like power, like electricity?
More electricity,
okay.
Physical electricity, right? Like AI has the potential to be the biggest productivity enhancer for the global economy since electricity, as long as we have enough electricity.
All right, when we come back, we are going to ask Dom which tech company he's the most bullish on.
This message comes from Apollo. In the financial landscape, change is the only constant. Apollo is rethinking assumptions and crafting the solutions that the future demands. At Apollo, they think it through, then they think it new.
So, Dom, what is, in your view, the most ambitious way to play AI right now? And what is the safest way to play it?
Yeah, that's a really interesting question. When I look at my strategy, I have a few names that if AI really hits in a big way, there could see fabulous revenue growth from that potential. And a name that comes to mind in that scenario would be an AMD, right? I think they have a real potential to be a second source to NVIDIA in the data center for the companies that need, true general purpose compute. In terms of where AI is going to improve the business model, and it feels more marginal, but it's clearly direct AI. I would highlight the electronic design automation software companies, the EDA software companies, Synopsys and Cadence. These two companies design all of the software that all of the chips in the world are designed on today. And not only is AI, supercharging their business with the hyperscalers, right? Amazon, Meta, Google, all designing their own chips with these two companies, but they're also making the design process more efficient by putting AI into the software itself. So the ability to materially increase the potential chip outcomes, and as a result, their core businesses should be accelerated from that too.
Wow! So if chips are the picks and shovels of AI, then these are the pick and shovel makers for the pick and shovel makers. I like that.
Exactly.
Well, Dom, you've given us a lot more than 7 names to think about when it comes to AI. Thanks so much for joining us.
Thanks for the time, guys.
Thanks, Dom. This has been great.
Dom manages a fund that includes holdings of AMD, AppLovin, HubSpot, ServiceNow, Synopsys, Cadence, and many other technology companies. Well, and that's everything you need to know for Sunday, November 17th. The show is produced by Trina Menino, Jess Jupiter, and Jessica Fenton. Michael Lavelle and Jessica Fenton are our sound designers, and Michael also wrote our theme music. Aisha Al-Muslim is our development producer, and Scott Salloway and Chris Zinsley are the deputy editors, and Falana Patterson is the head of news audio for the Wall Street Journal. For even more, head to WSJ.com. I'm Teles Demos.
And I'm Gunjan Banerjee. Until next time.
Yeah, well, we haven't even talked about crypto yet.
That's for another.
This is not that long of a show. Don't even go there.
10 seconds.
Don't
I
even
think
go
crypto is
there.
going to be a really big thing.
This message comes from Apollo. In the financial landscape, change is the only constant. Apollo is rethinking assumptions and crafting the solutions that the future demands. At Apollo, they think it through, then they think it new.
FT News Briefing is supported by Merrill. We all have dreams. Dream houses, dream vacations, or sending our kids to their dream colleges. But finding straightforward ways to turn those dreams into realistic goals, that's where things get tricky. Merrill understands that. That's why, with a dedicated Merrill advisor, you get a personalized plan and a clear path forward. And having the bull at your back helps your whole financial life move with you. So when your plans change, Merrill is with you every step of the way. Go to ml.com/bullish to learn more. Merrill, a Bank of America company. What would you like the power to do? Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor, member SIPC.
It took 10 days after his victory in 2016 for Donald Trump to announce his first cabinet nominee. But he's working a lot faster this time around. In a little more than 2 weeks since the 2024 election, Trump has already put forward more than a dozen major nominations. This is Swamp Notes, the weekly podcast from the FT News Briefing, where we talk about all of the things happening in U.S. politics. I'm Sonia Hudson. And this week we're asking, what do Trump's cabinet nominees tell us about how his second White House will function? Here with me to discuss is Lauren Fedor. She's the FT's Deputy Washington Bureau Chief. Hi, Lauren.
Hi, Sonia.
And we've also got Anthony Scaramucci. He was very briefly communications director for the first Trump administration. He also co-hosts the U.S. version of the Rest is Politics podcast. Hi, Anthony.
Hi to both of you. You're so polite. You're not going to mention I got fired after 11 days. It's very nice of you.
Yeah, well, I was waiting for you to bring that up. But before we start, I just want to say that we are recording this on late Wednesday afternoon, East Coast time. And, you know, like I mentioned, these cabinet nominations and news are coming really, really fast. So things may have changed by the time this podcast comes out. But in the meantime, Anthony, given all of your experience on the Trump transition team and in the Trump White House, what's your impression of this first batch of cabinet nominations?
You know, I'm going to give him the benefit of the doubt on a lot of things, and I'm going to provide some context. And so cabinet selections that the president has felt he's been aggrieved by that agency or department, he's chosen loyalty over everything else. He's chosen a person that he thinks is on his side come hell or high water and will probably be less process-oriented and more loyal to him. And so, you know, Pete Hegseth, he sees him as an extreme loyalist, non-establishment person.
Yeah, Pete Hegseth, that's the Fox News host turned nominee for Secretary of Defense.
Right. You know, it's going to be a tough job, though, because Pete's never had an executive role. But those are places Trump feels, I've been aggrieved by these places. We're choosing loyalty over anything else, not experience, not consensus competence or anything like that. We're going with loyalty. What's interesting about Treasury, which hasn't been picked yet, that's an agency he doesn't feel could aggrieve him. And he also feels that agency has helped him, that department, has helped him, you know, imposition of sanctions, imposition of tariffs, recoding the American tax system. And so he's being more cautious and he's being more deliberative about that. So you name the people, I'll tell you what he's thinking, why I believe he selected those people.
What about Howard Lutnick in the Commerce Department?
So I think, you know, Howard's going to be mad at me, and I know Howard a long time. I think he pissed off Trump. And how did he piss off Trump? You can't out-Trump Trump. And so you can't get on the airways and grandstand in front of Donald Trump. He doesn't like it. Okay, it's the Trump show. You know, if you get more famous than him, or you think your britches are too big, he'll shoot you because it's his show.
Right. Yeah. The FT has been reporting this week that Howard Lutnick, this hedge fund guy and Trump's transition chair, was maybe campaigning a bit too hard for the Treasury job.
Okay. Yeah. Exactly. So I think Lutnick pissed him off. I think he would have gotten Treasury if he understood Trump's personality better. Remember, you guys call yourself the Swamp Notes because you think it's a swamp. I don't think it's a swamp. I think it's a gold-plated hot tub, and I think the people in Washington, they like sitting in that hot tub together, and they don't like people like Howard Lutnick that don't understand the rules of the hot tub.
Right. Well, that's quite a metaphor. I mean, I want to ask you, though, a little bit about, on this point about the president or the president-elect not wanting to share the limelight with anyone. I mean, we've seen that play out time and time again. I'm actually thinking back to a rally shortly before the election where he was asking the crowd where they wanted to be in 4 years. And one of the guys in the front shouted out, "At a J.D. Vance rally." And the president, looked very uncomfortable for a second, like, oh, wait, this is my show. This isn't J.D. Vance's show. But I'm wondering, some of these picks you mentioned, do you think that these guys are going to butt heads with the president-elect?
I think Bobby and Trump will spar with each other. I do think that because Bobby's a very big personality.
Bobby being RFK Jr.
Yeah, RFK Jr. But I also think that what Bobby's doing is not in Trump's wheelhouse. Okay, so meaning HHS is not going to harm Trump. There's nobody in that agency who's going to give Trump a hard time like the FBI did or the CIA, et cetera. So, it may be fine. Okay, Elon Musk, unfortunately, I got him lasting, I'm going to say that he lasts 30 Scaramucci's, okay, which is 330 days. Okay, each Scaramucci is measured by an 11-day unit of time. He would traditionally get blown out after 90 days, but he's so rich and so influential that the blowout will probably happen almost at the end of the first year. So, but you mentioned J.D. Vance. Now, let me tell you something about J.D. Vance, okay? I'm giving him a 2-week A+. Where is J.D. Vance? Let me look under my desk, guys. This is not a video conference. Let me look. J.D., are you down there? No, he's not down there. Where is he? Okay, J.D. Vance is a smart kid. He's like, I got to get the hell out of the way of Donald Trump. It's his show. He won the election. You haven't seen him. Now
he's being a good soldier right now.
He knows he's an accessory, and he's getting himself out of the way. All relationships can be repaired with Trump. J.D. Vance calling him the American Hitler, Bobby Kennedy and him fighting. So just remember that about Trump. He's nasty and he's in a fight with people, but these relationships get repaired. About 4 days ago on Truth Social, he called me not a loser, but he called me a major loser. Okay, so I think on a scale of 1 to 10, his love for me is probably a 9.5. Who the hell would be thinking about me 7 or 8 years later if I'm not in his mind somewhere? And that's Trump. That's how Trump operates. That's how he thinks.
Yeah, so let's talk a little bit about your time in the White House before your relationship with then President Donald Trump went downhill. We heard constantly at that time about the quote unquote adults in the room during that administration. John Kelly, Trump's first chief of staff, James Mattis, his first defense secretary, these people that tried to constrain Trump's impulses. Based on your time in the West Wing, Anthony, would you say that those adults in the room were successful?
Obviously, I'm good friends with John, and he would tell you, and he has said publicly, so I'm not breaking confidence in sharing this, that, yeah, a lot of crazy stuff got stopped. And so the question is now, how are we going to get the crazy stuff to stop? And how are we going to get the good stuff to happen? And so I hope that the people in the room are going to take their oath seriously. They're taking an oath to the Constitution and to serve the American people. They're not taking an oath to a person. They're taking an oath to the institutions that those people are caretaking. So I hope that happens. But, we'll have to see.
you've kind of teed up my next question there for you, which is, though, who do you see as those adults left in the room right now?
Well, Susie's a total pro. I mean, I'm sure you guys know her. We've had some interaction with her. I mean,
Susie Wiles, the chief of staff. Yeah.
I've known her dating back to George W. Bush. She's a total pro. J.D. Vance is a very smart person. So there are adults in that room.
Well, Lauren, what do you think? I mean, how do you see the personnel changes this time around impacting how the administration works?
You know, I don't disagree with Anthony's characterization of a lot of those individuals. They're consummate professionals who've been doing this for a long time and know how to run disciplined operations. Look, I mean, it's like a cliche at this point to point out that the Trump campaign, although there were times when the now president-elect kind of freelanced and made his own decisions, for the most part, they ran a very disciplined campaign, and you're seeing a lot of those individuals come over now to run this White House. So there's continuity there, and there's form there, and it shows that they can run a successful operation. But, you know, we also have already in this conversation and in previous episodes, we've talked about loyalty as the driving force above all else here. And, you know, Anthony alluded to the fact that a lot of these individuals, particularly in the cabinet, will be taking oaths of office to the Constitution. I'm a little bit more skeptical that some of these people are actually, yes, they will say that in name, but where do they really see their loyalty lying? Is it to the country writ large, or is it to their boss behind the Resolute desk?
Mm-hmm. Well, what about Trump himself? I mean, Anthony, you obviously have had a complicated relationship with him that's gone through many cycles over the years. How do you think that he has changed in the time that you've known him and in the time since you served in his administration?
So it's a great question. And so, you know, I haven't talked to him in a long time. So I don't know if I'm the right person to answer that question. But I think the consensus is that it was more about winning potentially and less about aggressively, forcefully governing. You know, you could be sitting here where the system is going to block him from running from re-election. Maybe he'll try to test that, and maybe he won't. But if he doesn't, he's got 4 years. And sometimes when people have 4 years, know they can't run for re-election, they get more legacy minded and they get more transformative. And so there is an opportunity. I'm not saying this will happen, but there is an opportunity for him to be a post-partisan president. And so there might be a more transformative Donald Trump.
Lauren, how do you think that Trump has changed as a person from his first administration to his second?
I am going to plead the fifth on this one. So, yeah, Anthony is far better positioned to answer that than I am. But I do think, you know, and to bring it back to policy, you know, talking about perhaps what he'll do with the tax agenda. I mean, he certainly has, they keep saying he has a mandate, and he does have a clear mandate, right? He won a decisive victory here across the board in improving his margins. I mean, we'll have to double check my numbers, but I think in 48 out of 50 states, last I checked. So I think that emboldens him as he goes into whether it's negotiations with Capitol Hill or seeking to use the executive to advance his agenda. And he knows what he's doing this time in a way that, no disparagement to those who were around early days last time, they were kind of learning on the fly a bit.
Yeah, well, just to wrap up, Trump had so much turnover in his first administration. Do you think that given the focus on installing loyalists this time, that there will be a bit more stability in a second Trump White House?
You know what the definition of insanity is? What's the definition?
I think I've heard that before, but enlighten me.
So, you know, there's a great cartoon somewhere where you come in, you're getting handed the MAGA hat, you're waving, and as you go by Trump, you get plunged in the back with a knife, and then another person shows up. Trump has been miraculous at finding a new group of caballeros that are going to work for him. Okay, this group now includes Howard Lutnick and Elon Musk, and they weren't in, you know, Musk was bundling and writing checks to Biden, and Lutnick was bundling and writing checks to Clinton, Hillary Clinton, and they're now with Trump, right? And so you tell me, you know, you know, they say on Wall Street that past performance is not indicative of future results, right? You have to say that to people. Is past political behavior indicative of future behavior? Okay, so I think it is.
Lauren, what do you think?
I tend to think these new caballeros in Anthony's language, they kind of know what they're signing up for here, and they think that they're ready for it. And there was a lot of turnover, but there were professionals and individuals there who made it the long haul. So I would expect we'd have a couple this time around.
All right, we are going to take a quick break, and when we come back, we'll do exit poll.
I'm Michaela Tindera, host of Behind the Money, a podcast from the Financial Times. Every week, we take you inside the biggest business and investing stories of the moment. From the problems at Volkswagen.
The company is saying that this is not a short-term crisis.
To Wall Street's fixation on private credit.
And now there's a question of what risks are lurking here.
Follow Behind the Money wherever you listen to podcasts.
If you want corporate drama where life itself is stranger than fiction, this feels like it.
And we are back with Exit Poll, where we talk about something that did not make it to the FT's front page and apply rigorous political analysis to it. So, Anthony, we've got a few questions here for you, and we're going to do these rapid fire style. You ready?
Let's do it.
All right. So your old coworker, Sean Spicer, was on Dancing with the Stars. Which reality show would you want to be on?
Well, I already did it. Special Forces. I was backing out of helicopters, getting drowned in cars. It was fun. I would never do Dancing with Stars because I want to stay married.
All right. Your podcast is super popular in the UK, which is, of course, also the home of the FT. Why do you think you're so popular across the pond?
Because I'm blue collar and the people listening, they live in a fairly class-structured system. And they like the fact that I don't take myself that seriously, even though I've been able to, live a part of the American dream. I'm still talking to the doormen and talking to the deli bologna slicers the same way I did when I was a kid.
What is Donald Trump's best quality?
He's charming. He when you're with him, he can be gregarious and charming. And he's the best, most popular stand-up comedian in the United States. Okay, he has very good comedic timing.
Now, you recently told the FT that your favorite Italian dish is tomato sauce and meatballs. I'm personally very interested in your answer to this question. What is the key to making a good meatball?
Okay, so I'm an Italian mama's boy. I have never made a meatball.
You've never done one.
Okay, you have to understand something about the way, my boxers have been ironed since 1965. Okay, so you're talking about an Italian mama's boy that's never cooked, but I will say this because I go to Rayo's frequently, which is a very hard to get into restaurant here in New York. It's 130 years old. You gotta fry them a little, and then you gotta drop them in the sauce so the inside tastes a little poachy. Okay, and if you do that, you can have a good meatball.
All right. Well, maybe your mom can email me her recipe too.
Yeah, well, my mom would love to do that. By the way, trust me, you talk your ear off.
Great. We'll follow up after this. And lastly, what would it take for you to accept a job in the second Trump White House?
A lobotomy?
All right. Well, I think we'll leave it at that.
You didn't even laugh at that.
She laughed. I saw her. She's just a consummate professional, so she tried to swallow it.
Between you and me, I was stifling a laugh. Lauren can attest. She saw me.
All right. I just want to make sure at least that I'm hitting some of the notes with the audience. My God.
All right. Let me take that again. I want to thank our guest, Anthony Scaramucci. He's a former White House communications director. He also co-hosts the U.S. edition of The Rest is Politics podcast. Thanks so much, Anthony.
Great to be on with you guys. Thank you. Those are great questions, by the way. Thank you. I enjoyed it.
I also want to thank Lauren Fedor, the FT's Deputy Washington Bureau Chief. Thanks, Lauren.
Thanks, Sonia. And thank you, Anthony, for joining us.
Great to be on, guys.
This was Swamp Notes, the U.S. politics show from the FT News Briefing. If you want to sign up for the Swamp Notes newsletter, we've got a link to that in the show notes. Our show is mixed and produced by Ethan Plotkin. It's also produced by Lauren Fedor and Mark Filipino. Special thanks to Pierre Nicholson. I'm your host, Sonia Hudson. Our executive producer is Topher Forhez, and Cheryl Brumley is the FT's global head of audio. Original music by Hannes Brown. We're off next week for Thanksgiving, but we will be back on December 7th with more U.S. political analysis from the Financial Times.
Presented by BlackRock.
Want to know what's happening in the markets? On The Bid, a podcast from BlackRock, we break down what's happening in the world of investing.
We see in so many of the developed economies, people just don't have the adequacy of savings to live in retirement in dignity, specifically in the United States.
And explore the forces changing the economy and finance.
We've never had such fantastic alignment around public policy and technological innovation that we see in infrastructure right now.
Subscribe to The Bid wherever you get your podcasts.
Are you looking to progress in your career? Join the Pearson Business Book Club. You'll get free monthly webinars from expert authors on important business, personal development, and finance topics. Each month, we choose a Pearson book and host a live webinar with the author. They'll share game-changing and practical ideas from the book and answer your questions. Search for Pearson Business Book Club to sign up for events and join the mailing list.
FT News Briefing is supported by Merrill. We all have dreams. Dream houses, dream vacations, or sending our kids to their dream colleges. But finding straightforward ways to turn those dreams into realistic goals, that's where things get tricky. Merrill understands that. That's why, with a dedicated Merrill advisor, you get a personalized plan and a clear path forward. And having the bull at your back helps your whole financial life move with you. So when your plans change, Merrill is with you every step of the way. Go to ml.com/bullish to learn more. Merrill, a Bank of America company. What would you like the power to do? Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor, member SIPC.
Good morning from the Financial Times. Today is Friday, November 22nd, and this is your FT News Briefing. There's been a shakeup in Donald Trump's search for his top law enforcement officer, and Gautam Adani's corporate empire is in disarray. Plus, my colleague Chris Giles has a hot take on tariffs and inflation.
When academics have looked across the whole piece, they don't see a big price effect. In fact, they see barely any price effect at all.
I'm Kasia Broussalian, and here's the news you need to start your day. Matt Gaetz withdrew his name from consideration for U.S. Attorney General yesterday. The former Florida congressman said it had become, quote, unfairly distracting. U.S. President-elect Donald Trump shocked Congress when he picked Gaetz to lead the Department of Justice. Besides not having much legal experience, he's also been the subject of a congressional investigation. That was over alleged sexual misconduct and drug use. But just hours after Gaetz dropped out, Trump announced his new pick for the role, former Florida Attorney General Pam Bondi. Indian billionaire Gautam Adani has had a rough 2 years. First, he was accused by a short seller of fraud and market manipulation, something Adani completely denies. But then on Wednesday, U.S. prosecutors in New York charged him in an alleged years-long bribery scheme. The FT's Joe Miller has been following the list of allegations, and he joins me now. Hey, Joe.
Hi.
So let's start with Wednesday's indictment. What exactly is Adani accused of?
So Adani is charged alongside 7 others of being involved in a sprawling multi-year bribery scheme in which they allegedly conspired to pay more than $250 million in bribes to various Indian officials and states across India in order to get favorable terms on solar power contracts for some of Adani's companies. And these are enormous contracts, actually some of the biggest solar power contracts in the world, projected to bring in more than $2 billion in profit in total.
And why are U.S. authorities bringing charges against Adani?
The reason it's being brought in the US both as a criminal complaint and a civil complaint from the Securities and Exchange Commission is because US prosecutors allege that at the time this bribery was going on, the Adani companies or some of their subsidiaries were raising money from US investors and in US markets. Therefore, they claim it's the US jurisdiction to go after Adani on this matter. Adani says that the allegations are baseless and denies them and says it will use all possible legal recourse to fight them.
And you mentioned this a little bit, but why is this a big deal? I mean, just how influential is the Adani Group?
So the Adani Group is one of the biggest conglomerates in the world and one of the biggest businesses in India. And Gautam Adani himself is perceived as being very, very close to Prime Minister Narendra Modi. And the group is heavily invested in infrastructure. It started off in ports and now has energy and data and all sorts of other subsidiaries, and is a key part of Modi's plan to turn India into a developed country by the time it reaches its 100th anniversary in 2047. And so any allegations of wrongdoing at the company and any hit to its share price, like we've seen on Thursday in India, is hugely consequential.
Yeah, and like I mentioned, this actually isn't the first time that the Adani Group has been in some hot water. Can you give us a little bit of background on that?
Sure, and it's really only actually recovered from the last hit to its reputation, which happened in early 2023. You may remember there's a US-based short seller called Hindenburg Research. They alleged that Adani had been pumping up its share prices and involved in accounting irregularities, all of which Adani strenuously denied, but nonetheless, it knocked tens of millions of dollars off the Adani company's value, and the company spent quite a long time, many, many months, trying to shore up trust with investors, only for this criminal indictment to hit this week.
So what happens next for Gautam Adani and his backers?
That's an open question, really. India does have an extradition treaty with the US, so technically speaking, the US could ask for Adani to be extradited to the US. Observers have concluded that that is highly unlikely under Narendra Modi's regime, but nonetheless, you can expect that request to be made. There's one other wrinkle, of course, which is that Donald Trump is coming into office in January, and as is traditional, the Department of Justice upper ranks are replaced with people loyal to the new administration, and Gautam Adani has been a backer of Trump too. So it is certainly possible that the new Department of Justice with new leadership could take a different view to pursuing this.
Joe Miller is a U.S. legal correspondent for the FT. Thanks, Joe.
Thank you very much.
The International Criminal Court has issued an arrest warrant for Benjamin Netanyahu. The allegations include crimes against humanity and war crimes. It's the first time that the court has issued a warrant for a Western-backed leader, and it means that any member state of the ICC would have to arrest Netanyahu if he entered their territory. That's 124 countries and includes most of Europe. The move by the ICC is a dramatic escalation and highlights just how isolated Israel has become over its war in Gaza. Netanyahu's office called the decision anti-Semitic and rejected the accusations. There's this consensus out there that Donald Trump's plans to increase tariffs will spike inflation. The idea is that U.S. importers would have to pay more for foreign goods, and they would then pass those costs on to consumers through higher prices. But it turns out that argument isn't so clear-cut. Here to explain is the FT's economics editor, Chris Giles. Hey, Chris.
Hi, Kasia.
So walk me through this pushback. First of all, where's it even coming from?
Well, first of all, it comes from the president-elect himself. Donald Trump says it's not Americans who have to pay for tariffs. It ends up being the exporting country because they have to lower their prices, so Americans don't pay more. And there's also some pushback from some economists. So Oren Cass has been very public. He's the chief economist of American Compass. And he says that when you look at what actually happened last time round, you have to cherry pick a little bit to see the Trump tariffs from the 2016 to 2020 period in the data. But there's been a lot of debate about what this says about whether tariffs actually cause prices to go up.
Yeah, well, let's unpack that data just a little bit more. Did we actually see price increases under Trump's first round of tariffs?
Well, there were some specific tariffs, like on washing machines, and we did definitively see washing machine appliance prices in the US rise compared with other goods. But in lots of other areas, when academics have looked across the whole piece, they don't see a big price effect. In fact, they see barely any price effect at all for consumers. The importers, though, however, have paid everything. So it is definitely paid in the US, but it's quite hard to identify a particular price effect. And what's most likely going on is that at the time, the tariffs are quite specific, and big retailers and wholesalers almost certainly spread out the pain to items that didn't have tariffs on them, so prices rose overall. They probably shifted some of the burden onto their employees, so maybe wages fell a little bit or didn't rise as fast as they otherwise would, and probably took a little bit of the pain through profits. But nearly all of the pain stayed in the US. It wasn't shifted abroad.
All right, so while prices maybe didn't rise for U.S. consumers, the costs from the tariffs were still mostly felt in the U.S. So, like you said, those were pretty targeted, and now Trump is talking about expanding them. Does that maybe change how inflationary tariffs might be?
I think it should change how inflationary we see these tariffs are, because what I was just describing about how importers could spread out the pain in different ways, that will become harder to do, because if it's a blanket tariff, you just probably have to raise your prices across the board for imported goods. But one thing I think we should all remember in this is that the US is a very large economy, and it's also internationally an extremely closed economy. So imports of goods are only one relatively small amount of US consumer spending. Lots and lots of goods bought in the US are made in the US, and imports are actually less of an issue than they are for other countries.
So I guess how should we be thinking about Trump's promise to increase tariffs across the board when it comes to the US?
When it comes to the US, I think you shouldn't start thinking that this is a good idea or is good economics. The US will pay for the tariffs. Exactly how the US pays is much less clear. Whether it all ends up in price or ends up being lower wage increases, that's a much more difficult question, and I'm sure academics will be poring over the data in the years to come.
Chris Giles is the FT's economics editor. Thanks, Chris.
Thanks, Kasia.
Finally, there's something you're going to want to listen to this weekend. It's the latest episode from our U.S. politics podcast, Swamp Notes. And tomorrow, we're talking to Anthony Scaramucci. He was Donald Trump's short-lived communications director. Emphasis on the short. But he's taking it in stride.
Elon Musk, unfortunately, I got him lasting, I'm going to say that he lasts 30 Scaramucci's, okay, which is 330 days, okay? Each Scaramucci is measured by an 11-day unit of time.
So yeah, listen to the full episode on Saturday right here in your FT News Briefing feed. And that's it from us this week. The FT News Briefing is produced by Neve Rowe, Fiona Simon, Sonia Hudson, Mark Filipino, and me, Kasia Brusalian. Our engineer is Joseph Salcedo. We had help this week from San Giovinco, Breen Turner, David De Silva, Michael Lello, Peter Barber, and Gavin Kallman. Our executive producer is Topher Forhes. Cheryl Brumley is the FT's global head of audio, and our theme song is by Metaphor Music.
Presented by BlackRock.
Want to know what's happening in the markets? On The Bid, a podcast from BlackRock, we break down what's happening in the world of investing
We see in so many of the developed economies, people just don't have the adequacy of savings to live in retirement in dignity, specifically in the United States.
And explore the forces changing the economy and finance.
We've never had such fantastic alignment around public policy and technological innovation that we see in infrastructure right now.
Subscribe to The Bid wherever you get your podcasts.
Shape your tomorrow. Xtrackers offers innovative opportunities to enable you to take your financial future into your own hands. With ETFs that make access easy, transparent, and cost-effective, start your investment for the future at xtrackers.com. Together, we grow. All investments involve risk, including loss of principal. Information on the fund's investment objectives, risk factors, charges, and expenses can be found in the fund's prospectus at xtrackers.com. Read it carefully before investing. Distributed by ALPS Distributors, Inc.
FT News Briefing is supported by Merrill. We all have dreams. Dream houses, dream vacations, or sending our kids to their dream colleges. But finding straightforward ways to turn those dreams into realistic goals, that's where things get tricky. Merrill understands that. That's why, with a dedicated Merrill advisor, you get a personalized plan and a clear path forward. And having the bull at your back helps your whole financial life move with you. So when your plans change, Merrill is with you every step of the way. Go to ml.com/bullish to learn more. Merrill, a Bank of America company. What would you like the power to do? Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor, member SIPC.
Good morning from the Financial Times. Today is Wednesday, November 20th, and this is your FT News Briefing. Bridgewater is partnering with State Street on a new ETF, and both the West and Russia are upping the ante in Ukraine. Plus, Asian defense stocks are booming this year. I'm Sonia Hudson, and here's the news you need to start your day. The hedge fund Bridgewater is teaming up with State Street's asset management arm. They'll be offering an exchange-traded fund dubbed the All-Weather Fund. It basically has a huge range of assets that are meant to profit under a lot of different market conditions. The deal still has to be approved by U.S. regulators, though. Traditional asset managers like State Street have been rushing to strike agreements with big names in alternative assets. KKR has recently cozied up to Capital Group, for example, and BlackRock is flirting with Partners Group. The traditional folks want to stay relevant to retail customers, and the alternatives managers are hoping the partnerships will help them reach wealthy customers. Ukraine has hit Russia with U.S.-made long-range missiles for the first time. That's according to Ukrainian officials. The U.S. lifted restrictions on their use last week. It was a huge policy shift. Here to talk about the escalation is the FT's Chris Miller. Hi, Chris. How's it going?
Hey, it's going fine here, but currently sitting in the dark. Russia launched a missile attack over the weekend and knocked out some of Ukraine's power generation capacity. So we are back to rolling blackouts across the country.
Wow. Well, Chris, thanks for joining us in the dark. What do we know about these strikes that Ukraine launched on Russia?
We don't know a whole lot, except for the fact that Ukraine launched this first initial strike using American-provided weapons against a Russian ammunition depot in the Bryansk region. This is a region that's not too far away from the Kursk region, where Ukraine holds about 600 square kilometers of territory that it's really trying to hold on to, while Russia's trying to push it out of that territory.
Now, I mentioned just the fact that the U.S. is allowing Ukraine to do this was a big policy shift. What does this mean for the war itself? Is this a turning point?
You know, it's certainly a turning point in terms of American policy. However, analysts that I speak with, even Ukrainian military officials here say, this isn't going to be a silver bullet for us. It's not going to completely turn the tide of the war in our favor, but it will hopefully have an impact on the battlefield, particularly around potentially this region of Kursk, where the Russians are trying to push out the Ukrainians who are holding territory there that they captured back in August.
Do you think that this will prompt European countries to allow Ukraine to launch their missiles into Russian territory?
So the United Kingdom and France have both provided long-range weapons to Ukraine, and they have signaled that they would allow the Ukrainians to use these missiles inside of Russia, but they haven't really given the green light for Ukraine to use them, but because they haven't really wanted to be out of step with Washington. So it could be that within the next days or weeks, we could see potentially the use of these British and French weapons inside of Russian territory. But right now, we haven't heard a direct decision made in London or Paris yet.
So as Ukraine starts to use these long-range missiles in Russia from the US, potentially from other countries as well, how is Russian President Vladimir Putin responding to that?
Well, Putin has responded by signing a decree lowering Moscow's potential threshold for using nuclear weapons, while his foreign minister, Sergei Lavrov, said that it's impossible to use these weapons inside of Russia without Washington's direct support. So they're saying that the US and by extension NATO are now directly entering this war. But of course, we know that Russia has escalated long before. Russia has brought more than 10,000 North Korean troops into the fight. It's also taken missiles from Iran. And so we are seeing the expansion of this war. Neither side really can continue the war at this pace with the casualties that they're sustaining, the resources that they're expending. And so we're seeing Russia's allies as well as Ukraine's allies deepen their support for each other's war efforts.
Chris Miller covers Ukraine for the FT. Thanks, Chris.
Thank you for having me.
Walmart reported earnings yesterday, and they surpassed analyst predictions. Revenue came in at $170 billion in the third quarter. That's up 5.5% from last year. Operating income also grew by about 8%. Walmart's success has a lot to do with lingering inflation. In a twist, wealthier customers are turning to the retailer's low-price products. For example, the majority of its growth is thanks to shoppers whose households earn more than $100,000 per year. And investors are feeling confident about Walmart's profit outlook. Its shares are up almost 60% this year. The stocks of Asian defense companies have been on a rampage this year. Global conflicts are making countries rethink their defense spending, and it seems like investors are betting that the region is ready to lead a major rearmament boom. Here to talk to me about it is the FT's Joseph Cotterill. Hi, Joseph.
Hi there.
So first off, can you give us an idea of just how well Asian defense stocks have been doing?
If you look at the top 20 or so best performing stocks in the world this year, you'll notice that one or two are surprising names next to the Nvidias, the Palantirs, and the other big US names that you might expect. Names such as Hanwha Aerospace and Mitsubishi Heavy Industries. These are Asian defense companies of various stripes, and they represent a region that is itself rearming in response to darkening international security order, but also a region that's selling more of its arms abroad.
And which countries in particular are doing really well?
Korea and Japan are the standouts. Korea last year became one of the world's top 10 arms exporters. It's really risen up the ranks. That's partly because of industrial policy. It has a defense industry that it's nurtured at home for obvious reasons, given the threat of North Korea. But also it makes the right kind of kit cheaply enough for European and increasingly Middle Eastern states to be interested. And then you have Japan. It's increasing defense spending from what was an informal cap of about 1% of GDP towards a more NATO-style 2% of GDP. That's very much a story of Japan rearming itself in recent years.
Is there a regional or geopolitical element to why these countries have been so successful in selling arms?
This represents a fragmentation of the global security order and responses to a more isolationist United States, particularly as the second administration of Donald Trump looms over the world. If the US security umbrella of recent decades is becoming less sustainable as it turns inward, countries need to rearm as quickly and as cheaply as possible.
So, given all this uncertainty, then, should we expect defense stocks to keep outperforming other industries for the foreseeable future?
The caveat here is that defense and aerospace stocks generally do depend on big government orders flowing in. On the other hand, the Korean companies that we began with, their order books have really grown in the last few years, whether that's Poland and Romania buying Korean tanks or Middle Eastern states being interested in Korean-made missile defense. Also, the US Navy was in the middle of a big reorganization. Korean shipbuilders are interested in helping to refit and resupply that naval rearmament by the US. And so to the extent we can expect those to continue, the outlook is pretty strong for defense stocks, and that's partly reflected in their valuations.
Joseph Cotterill is the FT's emerging markets correspondent. Thanks, Joseph.
Thank you.
Finally, Thames Water over in London is really mucking things up. The utility company has poured about 104 billion liters of sewage into the central section of the River Thames since 2020. That's about 42,000 swimming pools of... Ugh. Anyway, the FT recently uncovered these findings, which come at an already choppy time for the company. It's been drowning in debt and has needed to hike up prices. You can read more on all these stories for free when you click the links in our show notes. This has been your daily FT News Briefing. Check back tomorrow for the latest business news.
Join Capital Group CEO Mike Gitlin for a new edition of the Capital Ideas Podcast. In unscripted conversations with investment professionals, you'll hear real stories about successes and lessons learned, informed by decades of investment experience. It's your look inside one of the world's largest asset managers. New episodes are available monthly. Subscribe wherever you get your podcasts. Invest 30 minutes in an episode today. Published by American Funds Distributors, Inc.
How can governments play a pivotal role as the world shifts? From decarbonising the economy to sustainable care systems, bold government strategies are needed now more than ever. Get informed by listening to Government Insights, the new podcast from EY Parthenon. This series explores how government executives can transform their strategies into actions that are future-proof and sustainable. Government Insights is out now. Download today wherever you get your podcasts.
FT News Briefing is supported by Merrill. We all have dreams. Dream houses, dream vacations, or sending our kids to their dream colleges. But finding straightforward ways to turn those dreams into realistic goals, that's where things get tricky. Merrill understands that. That's why, with a dedicated Merrill advisor, you get a personalized plan and a clear path forward. And having the bull at your back helps your whole financial life move with you. So when your plans change, Merrill is with you every step of the way. Go to ml.com/bullish to learn more. Merrill, a Bank of America company. What would you like the power to do? Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor, member SIPC.
Good morning from the Financial Times. Today is Monday, November 18th, and this is your FT News Briefing. The U.S. will allow Ukraine to hit Russia with its long-range missiles, and the dollar has been soaring ever since the election. Plus, big oil has its sights set on the ocean floor, again. I'm Kasia Broussalian, and here's the news you need to start your day. U.S. President Joe Biden has given Ukraine the green light to use American long-range missiles inside Russia. That's a major policy shift from Biden. He was afraid that the strikes would ramp up tensions with Moscow. The decision now comes after North Korea deployed thousands of troops to support Russia in the war. Ukraine will probably use the long-range missiles first to target Russian and North Korean forces in the Kursk region. Kyiv has held territory there since the summer. The U.S. dollar has hit a one-year high since Donald Trump won the presidency. That's because investors are betting that Trump's policies will drive up inflation, and a rising dollar could have a big impact on currency markets around the world. Here to explain is my colleague Jen Hughes. Hey, Jen.
Hey there.
So just unpack this recent rally for me a bit more. What's really driving the U.S. dollar?
Well, as you mentioned there, the Trump trade is a big part of it. The idea that his policies are likely to be inflationary, that means that the Federal Reserve will have to keep interest rates higher than perhaps we had previously thought. And then that keeps bond yields higher. So higher bond yields attract investors. On top of that, there's been this general idea of U.S. exceptionalism, the idea that U.S. market stocks as well as bonds are going to offer investors better returns. So that's just drawing capital into the U.S. and creating demand for dollars.
And what does this mean for U.S. companies?
Well, it's good for importers or really anyone spending dollars to buy things overseas. That includes tourists. We'll get better rates overseas as well. It's less good for exporters, for manufacturers. Now, this is why Trump has often said he wants a weaker dollar, because he does think it hurts exports and costs U.S. manufacturing jobs.
Okay, so it's not all roses for U.S. companies. It really sort of depends. But on the flip side, what does a rising dollar mean, for the rest of the world?
It's going to depend on which country we talk about specifically. Lots of countries would like a weaker currency because they do want to export more. But the sensitive bit is probably going to be the speed of any move and just how far it goes. Currency markets are incredibly difficult to stop if they pick up momentum and a trade starts going. And then suddenly everyone's calculations of what a currency rate should be have been thrown out of whack. That can cause some short-term economic pain. You might get policymakers in Japan or China worried about weakness in their currency, or sudden weakness rather, and wanting to do something about it. Then that could get political, and then we're off to the races in that case.
And looking ahead, do you think we're going to see continued strength in the dollar?
Yes is the short answer, though. Obviously, when reporters start betting on which way a currency is going to go, you can almost guarantee it would go the other way. This has happened before. But most people in the market do think the dollar's got a bit further. It can rally from here. And it seems to be the one Trump trade that most people are agreed on.
Jen Hughes is the U.S. markets editor for the FT. Thanks, Jen.
Thank you.
So while the dollar might be riding high, the euro is at its lowest level in a year, and European markets are lagging behind Wall Street by the biggest margin ever. A sell-off there has wiped out most of this year's gains in the Stoxx Europe 600. Just compare that to U.S. stocks, which are up 25% this year. Europe's fallen behind because traders are pricing in Donald Trump's possible tariffs. The president-elect has promised to tax all foreign imports by at least 10%. Analysts are worried that this could sting European companies pretty badly. Leaders of the world's biggest economies are gathering in Brazil today for a meeting of the G20. And even though he won't be there, Donald Trump's presence will certainly be felt. The president-elect is no fan of global kumbaya moments like the G20, and the sentiment seems to be spreading. I'll give you an example. Argentina's president and big Trump ally Javier Milei has already threatened to block the summit's joint conclusions. That's because of references to things like taxing the super rich and climate change policies. This sort of thing could be a preview of what global diplomacy could look like once Trump is in office. Offshore drilling is staging another comeback. companies are betting that the world still has a huge appetite for more oil. And they say that the next generation of platforms can help them dig not only deeper, but also cleaner. My colleague Miles McCormick recently went way out in the ocean to see what it looks like. Hey, Miles.
Hey, Kasha.
Okay, so set the scene for us. Where exactly did you go?
So I headed out to Shell's Vito platform, which is its newest platform in the Gulf of Mexico. About 150 miles from New Orleans in the middle of the ocean. All I can see broadly is sea and sky. I wanted to go out to see what the kind of new generation of platforms looked like and how they work. Shell's got a new pitch that it thinks can win over investors as it looks to ramp up drilling in the Gulf, and that is that it can do it more efficiently with a smaller platform, like Vito. And it's not just Shell. I mean, there's a resurgence of interest in deepwater drilling across the industry, and they're spending more and more money in plumbing the depths for hydrocarbons across the world.
Yeah, tell me a bit more about this bet that Shell and other companies like it are making. Just how much money is going into offshore drilling, and why is there so much confidence in the sector now?
I mean, there's been a surge of money pouring into the space over the last few years. I think analysts reckon that there'll be over 104 billion spent on offshore oil this year. That's the highest level the industry's seen since 2016. And it represents a bit of a reversal of fortune for the sector that kind of took a step back from the limelight in the wake of the Deepwater Horizon oil spill, which happened a little over a decade ago. But now offshore is very much back in vogue. And the industry, of course, received a big boost this month as well with the re-election of Donald Trump to the White House. Trump's expected to boost oil and gas leasing in the Gulf of Mexico.
Which kind of brings us back to Shell and that Vito platform that you visited. So what's so special about it?
It's different from the platforms that Shell has put out in the past in a couple of key ways. Fundamentally, what they've sought to do is bring down the cost of platforms that have traditionally involved putting a huge amount of steel out in the water. And their other argument is that they can also do it in a lower emissions manner than they used to.
We are absolutely committed to having the cleanest, greenest product on the market, and there is no better place to access that sort of energy than the Gulf of Mexico.
When I was out on the platform, one of the people that I spoke to was Ireti, who's Shell's general manager for US growth assets. Ireti's description of Vito is that it's kind of the Formula One of oil and gas.
Vito is quicker, she's faster, she's leaner, she's technologically more advanced. When we talk about, more value, less emissions, I mean, she's so dear to us.
For Shell, I suppose Vito represents the ability to continue doing what it is they do best, i.e. exploring for and producing oil, but doing it in a more efficient manner and ostensibly at a lower carbon emission.
All right, so it sounds like Ireti is a big fan of Vito, but what do environmentalists have to say about offshore oil's resurgence?
I mean, I suppose there's two key concerns that environmentalists have. One relates to Deepwater Horizon, which was this BP platform. And there's kind of a concern that as companies spend more on deepwater production, as they seek to drill deeper below the surface, that we're kind of leaving ourselves open to another spill. The other key issue is at a time when the climate crisis is worsening and there's kind of a need to dial back emissions and transition away from oil, platforms like this are locking in production for decades and decades to come.
Which honestly makes a lot of sense for where we are with the global climate right now. But how do people like Ireti respond to that?
So people like Ireti and the industry at large would say that, Yes, all well and good cutting emissions, but for now, people are still very reliant on oil. Every day we're guzzling huge volumes of the stuff.
The world demands energy because the world thrives on energy, right?
So long as we do need oil, so long as we rely on it, he says it's better to continue to produce it, but to do so at the most kind of carbon effective, cost effective way possible. And therefore, platforms like Vito are key to providing oil as we look into the decades ahead.
So I think when you talk about sustainably delivering good, reliable, cleanest form of oil and gas energy to the industry, to the world, Vito represents that for us.
Miles McCormick is the FT's Houston correspondent. Thanks, Miles.
Thanks, Kasia.
You can read more on all of these stories for free when you click the links in our show notes. This has been your daily FT News Briefing. Make sure you check back tomorrow for the latest business news.
Presented by BlackRock.
Want to know what's happening in the markets? On The Bid, a podcast from BlackRock, we break down what's happening in the world of investing.
We see in so many of the developed economies, people just don't have the adequacy of savings to live in retirement and dignity, specifically in the United States.
And explore the forces changing the economy and finance.
We've never had such fantastic alignment around public policy and technological innovation that we see in infrastructure right now.
Subscribe to The Bid wherever you get your podcasts.
Are you looking to progress in your career? Join the Pearson Business Book Club. You'll get free monthly webinars from expert authors on important business, personal development, and finance topics. Each month, we choose a Pearson book and host a live webinar with the author. They'll share game-changing and practical ideas from the book and answer your questions. Search for Pearson Business Book Club to sign up for events and join the mailing list.
This episode is brought to you by Vitamin Water. So much of what the world is obsessed with starts out in New York City. It's a place full of style and character that has something for everyone. With a range of flavors to meet any kind of taste, it's no wonder Vitamin Water was born there. Colorful, flavorful, anything but boring, Vitamin Water injects a daily dose of vibrancy into a watered-down life. Grab a Vitamin Water today. Vitamin Water is a registered trademark of Glasso.
With Lululemon, the real gift happens when they're living in it. When you give the fan favorite everywhere belt bag, the real gift is... And when the ultra-soothing Rest Feel slides are the gift, you're really giving them... This holiday, Lululemon makes it easy to give little luxuries that go beyond. Open the moment. Shop now at Lululemon.com.
Welcome, crypto fam, to the #1 daily Bitcoin pod. Yesterday, Bitcoin hit the new current all-time high of $99,900, coming within $100 striking distance of that six-figure milestone. Six figures still in play. In today's show, I'll be sharing the latest technical analysis and quoting the high priest of Bitcoin, Max Keiser. The only job the Treasury Secretary has is to get out of the way of Bitcoin. Preach. We'll also be discussing Bitcoin ETFs to see 2.4 billion of inflows as the China ETFs hit a record outflow. We'll also be discussing the potential SEC chair pledges crypto forward approach after Gensler's resignation. Goodbye, Gary. You're fired. Now go home and get your shine box. Like a good little Boy Scout. We'll also be discussing state pension plans can adopt crypto more easily than the private plans. Bring on the pension funds. We'll also be discussing Bitcoin may reach 180,000 by the end of 2025, according to the TYMIO founder. I think that is very modest, but nonetheless, we'll be entertaining it. We'll also be discussing Van Eck reissues a 180,000 Bitcoin price target for the current market cycle. And in fact, their CEO came out and just shared that Bitcoin is going to 300,000, and ultimately that's based on it overtaking half the market cap of gold, which is currently sitting at 17 trillion. We'll also be taking a look at the overall crypto market. All this, fam, plus so much more in today's show. Yo, what's good, crypto fam? This is first and foremost a video show. So if you want the full premium experience with video, visit my YouTube channel at cryptonewsalerts.net. Again, that's cryptonewsalerts.net. And today is pod episode 1827. I'm your host, JV. It's November 23rd, 2024. Bitcoin tapped a new all-time high, $99,900. And today a little correction, but still maintaining at roughly 97.5 at the time of the pod. And checking out our Coin 360. Let's kick it off with our market watch. Bitcoin pull back. The alts are ripping like the new Scottie Pippen. XLM up roughly 50% on the day. Polkadot up 33%. Uni up 16%, everything ripping, again, like the new Scottie Pippen here. And checking out coinmarketcap.com, the crypto market cap surpassed an all-time high market cap earlier. Today it's at 3.33 trillion. Bitcoin market cap on the cusp of hitting 2 trillion, new all-time high as well, currently sitting at 1.927 trillion. Let's check out the volume. Well, dominance is 58% even. The Bitcoin dominance took a step back along with the Ether dominance as some of the smaller alts are continuing to pump. And we have 220 billion in volume for the past 24 hours. Checking out top 100 crypto gainers past 24 hours. Stellar Lumens leading the pack, up 46% on the day, 136% on the week. Polkadot up 33% on the day, and Celestia up 30%. Which alts, if any, are you bullish on for the bull? Holla at your boy. And checking out the crypto bubbles, we get a visual perspective on the daily. Virtually all the alts just running it up right now, and on the monthly, very similar scenario, but even more impressive gains. And checking out the crypto greed and fear index. Yesterday, we tapped a high of I think it was 98. Today, we came down a little, but we're still in extreme greed at a 93. Yesterday, 94. Last week, an 86. And last month, a 69 in greed. And let's check out the time chain calendar, see how many sats we can get per dollar as of today's exchange, as this is loading. We're currently on block number 871,665. You can currently get 1,026 sats per dollar. Obviously, once we smash 100,000 per coin, it's going to be less than 1,000 sats per dollar. So last call, happy sat stacking Saturday, stack them sats. Here's the latest technical analysis, aka astrology for the broskies. Headline reads, Bitcoin wild odds see 85% chance a Bitcoin price above 100,000 by New Year's. Well, damn, we still got 5 weeks yet to rip through Q4. I dare say Bitcoin's going to hit 100K literally today. Is that so far of a stretch for a 2% pump from Satoshi? I know we're capable of, but I digress. Here you go. Bitcoin may have not cracked 100,000 yet. Well, it was virtually 99.9 on Coinbase. Some of the exchanges it did cross 100K, so it all matters what you're looking at, but nonetheless, according to live figures from Kalshi, the odds of Bitcoin being at 100,000 or higher on December 31st stand at 85%. There's even a 9% chance.
Hey, it's me, Tyler. Bose open earbuds are stylish. The color, it looks almost like an earring. I feel like it could go with anything. The music I'm making right now feels like a holiday. I want to look like it too. Check out Bose.com for more.
That Bitcoin will crack 150 G's in that time. I'd say that's very modest odds, but you don't know what you don't know, and obviously the people don't know much. And along with an outside bet of 250,000 or higher, right in alignment with our very own price prediction of the Oracle. Now, all in, Kalshi's medium forecast sees $125,000 Bitcoin price tag becoming a reality by the new year. Quoting the Kabisi letter, it seems that the prediction markets are beginning to price in a potential breakout rally above 100 G's. Send it. They also noted Bitcoin's market cap may end up at $2.5 trillion, which is virtually up another $500 billion by January 1st. Send it. Also, the hash rate continues to break out, hit yet another all-time high here this morning. Bitcoin is already up nearly 40% in November and 55% in the fourth quarter overall, making this year almost as lucrative as the last quarter of 2023 per data from monitoring resource CoinGlass. Rampant Bitcoin price gains have barely seen consolidation or support retests since Bitcoin broke through the old all-time highs that were set back in mid-March, where we tapped, I believe it was maybe 73 and some change. And while some argue the retracement should come next to shore up potential future upside, the market has yet to provide any signs of slowing down. 100,000 remains Bitcoin's most significant psychological barrier. Mass inflows of institutional investors are vying with long-term hodlers, distributing coins, hodl for years. According to the week on chain, the ETFs have played a key role, absorbing over 90% of the sell-side pressure by the long-term hodlers. Shout out to my diamond hands, laser eyes. However, as unrealized profits reach more extreme levels, we expect Bitcoin more long-term hodler spending, which in the immediate term has outpaced the ETF inflows. And there you have it. The US ETF saw their most successful week of inflows, and we'll be diving deeper into the ETF inflows a little later. And quoting Max Kaiser, the only job the Treasury Secretary has is to get out of the way of Bitcoin. And as you know, we're going to have a new Treasury Secretary in play here in the United States, and hopefully they stay out of the way of the Biddy, so Biddy can do what Biddy does best. Go up forever, Laura. And checking out some of the live charts, we'll pull this up here. Let me switch out the scene so you can see clearly. You can see this is brought to you via TradingView, via Coinbase. This is the 1 minute chart. You see there's a correction. We're currently sitting above 97.4. This is live right now, family. Welcome everyone joining the live stream. Here's the 1 hour chart. We're working our way backwards. We do have a rising wedge formation on the 1 hour. We do have a blue target sitting at 105, but we also have a bear flag and a bear target now forming at roughly the 93.4 level. And zooming out from the 1 hour, check out the 4 hour chart here on your screen. Also shows a bullish pennant breakout, bullish, and only a bull scenario here with a bullish pennant sitting sexy at 108,000, 108 in play. Let's go. And zooming out from there, we'll check out the 1 day. We've had a hell of a run up. You can see in the past couple of weeks here, finally a corrective red candle after pure bullishness all week. And again, we're still above 97,000, holding its own while the alts are finally running off the back of the most recent Bitcoin pump, which is pretty normal. When Bitcoin consolidates, a lot of those gains move into the alts. Maybe alt season is here to stay. What are your thoughts, family? As a rising tide rises all ships, and Bitcoin is literally up close to $30,000 in the past 30 days. So again, congrats to all the Bitcoiners out there. Checking out the 1 week, we still have 4 green consecutive weeks formed for the weekly closes. We still have the sexy cup and handle target sitting at 124,000. And zooming out from the weekly, take a quick look at the 1 month, and you can see Moonvember candle still building, still flexing. And I don't think we've seen the height of that candle yet. I think we're more likely to continue to push through 100,000 here in Moonvember. But let me know your thoughts, fam. I'm going to read your comments out loud. Welcome everyone joining the live stream. Now let's discuss the ETF volumes, which have been off the chain lately. Bitcoin ETFs see 2.4 billion worth of inflows. If China ETF sees some outflows, that's right. Spot Bitcoin ETFs saw their 4th best week of investments, while China-based ETFs suffered their biggest week of outflows in history, flashing another positive sign for the global Bitcoin adoption. US-based Spot Bitcoin ETFs recorded a cumulative 2.42 billion worth of the inflows during the trading week, November 18th to the 22nd, marking the 4th largest week since they debuted for trading back on January 11th. Now, the growing Bitcoin ETFs come 2 weeks after Trump won the 2024 presidential election, catalyzing Bitcoin's price rally, which resulted in a record-breaking monthly candle of over 40%. Yeah, literally, Bitcoin is up 30 G's in the past 30 days. That's an average of a...
Want to shop Walmart Black Friday deals first? Walmart Plus members get early access to our hottest deals. Join now and get 50% off a 1-year annual membership. Shop Black Friday deals first with Walmart Plus. See terms at walmartplus.com.
1,000 per day, and we now breached 99.9 for the first time, within an inch of striking distance from 100K. Now, meanwhile, China-based ETFs recorded their largest week of outflows, womp womp, quoting the Kabisi letter. Last week alone, China ETFs saw 2 billion of outflows, marking the largest weekly outflow in history. Despite deploying pandemic-like stimulus, recent data suggests China's economy is worsening. Not a good look, China. Bitcoin price action has historically benefited from our economic concerns, or these ones, and issues of traditional finance, like the collapse of Silicon Valley Bank and the voluntary liquidation of Silvergate Bank. And in March of 2023, U.S. banking crisis was the main catalyst for the Bitcoin bull run last year. According to the BitMEX co-founder, just blaze Arthur Hayes. The largest China ETF, which is the iShares China Large Cap ETF, saw a record $984 million worth of withdrawals over the past week, marking the 5th consecutive week of negative outflows. The record outflows come despite China's government deploying economic stimulus measures to ease investor concerns over a potential economic depression, according to the Kabisi letter. Quoting them here, even as hundreds of billions of dollars of stimulus has begun, Chinese consumer sentiment is just terrible. Over the last 3 years, consumer confidence in China is down 50 points. Such a drop in consumer assessment of the Chinese economy has almost never been seen before. That's right. What's going on, China? And during the same week, Bitcoin price continued to rally as Bitcoin ETFs broke the 100 billion net asset milestone. And ironic, so did MicroStrategy. Bitcoin price hit a new all-time high, surpassing 99.8 November 22nd, rising almost 10% for the past week, while China's FXI fell over 3%. Sucks to be China, doesn't it? And on the monthly chart, Bitcoin rose 48%, while the FXI fell over 7%, according to TradingView. Some expect the record monthly 10 billion stablecoin flows of the exchanges to push the Bitcoin price beyond 100K before the end of November. Others are concerned over the current rally's sustainability. Let's not forget, Michael Saylor just raised another $3 billion. Is probably buying right now on StatStack on Saturday. And notably, Chris from Crypto.com, he warned that the crypto market will need deleveraging before Bitcoin can breach 100K. Well, there you have it, yo. Let me know your thoughts. Okay, the latest with the SEC chairman. We know Gensler is out of there. Well, there's talks of the new chairman stepping in. So here's the latest. Mark, and I don't know how to pronounce this shit. Let's just say Ueda. Mark Ueda, Republican Commissioner of the U.S. SEC, suggested he would prioritize regulatory clarity for crypto if picked and confirmed as the next head of the agency. Let's go. Speaking on Fox Business November 22nd, he echoed many of the President Trump's talking points on digital assets, saying the SEC under Gensler had waged a war on crypto. And that's not an exaggeration. There was literally, and there still is, until Biden and his administration departs the White House, there is a legitimate war on crypto. So when Trump said, I will end Biden's war on crypto, he's not exaggerating. There's a literal war on suppressing crypto with Gensler as the head of the SEC. Now, Gensler announced November 21st he intended to step down as the SEC chair on Jan 20th. Why? Because Trump's taking office and he doesn't want to be embarrassed and fired by Trump. Ironic, the same day, coincidence? I think not. First off, from a regulatory perspective, we can provide the appropriate clarity, said Ueda. Some crypto is not even a security at all, but we need to make clear whether you fall within the SEC jurisdiction or not. That's right, because the SEC only has jurisdiction over securities. Why do you think Gary wants everything a security? So they can shake them down unlawfully, so they have jurisdiction over them. That's the only reason. Otherwise, it'd be the CFTC, right? Commodities, they have jurisdiction over those. Now, experts suggest that Trump could consider picking Ueda as the next SEC chair. Let me know if you agree with that. Following Gensler's farewell departure, the president-elect announced several candidates for various positions in his administration after winning the November 5th election, but no one to lead the securities regulator at this current time. Ueda said the SEC can consider creating regulatory sandboxes for crypto projects to further U.S. innovation, adding that any changes would require coordination with Congress and the White House for a cohesive, comprehensive approach. Quoting him here, whoever steps into the job, there is a lot of work that needs to be done to address some of the regulatory excesses, not only at the SEC, but at the other administrative agencies. Now, who will fill Gensler's seat? It's $1 million question right now. The SEC commissioner declined to comment on whether he will be willing to accept the top job at the regulator. Many consider Dan.
Empower your business or digital agency with Bluehost, trusted by over 5 million WordPress users globally. Bluehost features top-to-bottom hosting optimizations designed specifically for WordPress, giving you 24/7 access to a team of experts for support, plus thousands of WordPress help articles. So if you want to streamline WordPress website creation with intuitive controls and premium support, choose Bluehost, powering over 2 million websites worldwide.
Gallagher? I don't know this guy either. Let me know if you guys know him. One of Trump's leading contenders, but the Robinhood exec reportedly said, he's an executive at Robinhood, on November 22nd, he wasn't interested in the role. Meanwhile, U.S. President Biden nominated Ueda. Well, if Biden nominated him, I'm not a fan. I'll just throw it out there to fill the vacant seat. Anything Biden recommends, I don't recommend. That's just how I roll. Let me know your thoughts, though, fam. I just don't trust anyone at this point. The SEC reported November 22nd it had filed 583 total enforcement actions just this year and ordering roughly $8 billion in financial remedies. So when I see that, what difference is the SEC from the mafia shaking down folks? They literally shook down CZ for $4 billion. Single-handedly. I think they had to pay that fine to the Department of Justice and the SEC. Then they went after Kraken. They went after Coinbase. In fact, name a crypto exchange the SEC didn't go after. I'll wait. But there you go, yo. Let me know your thoughts on that. Who do you think should replace the chair? No hair Gare. Holla. We don't need the SEC and the Federal Reserve. We have Bitcoin. Preach. We don't need the central banking cartel either. No Biden cronies. Precisely. I don't want none of the cronies. Just say no to the cronies. Just say yes to the Bitcoin homies and no to the anti-Bitcoin cronies. We don't need more anti-Bitcoiners in there. Screw it. I'd rather have Nipsey in there. You got to put a suit on the nip. We'll get one of those bow ties for the dogs. And we'll say that's the new chairman. You're looking at him. You want to see the new chairman? You're looking at him right now. He has 4 legs. That's what a chairman looks like. He's not trying to suppress crypto. He wants Bitcoin to thrive, the Nippinator. He understands the more the Bitcoin thrives, the more treats, the more bones, the more chicken he's going to get. Simple. Win-win. Drain the swamp. All right, here we go, yo. State pension plans can adopt crypto more easily than the private plans. That's right, yo. State pension plans have an easier time allocating a portion of their assets to cryptos than the private pension plans, which must adhere to fiduciary regulation under the Employment Retirement Income Security Act of 1974. According to attorney Ali Itami of Lathrop GPM. Jesus, challenging me here today with these articles. And according to Itami, the Employee Benefit Security Administration, which enforces the ERISA regulations, cited the nascent, volatile nature of crypto as the primary reason for cautioning against the private pension plans investing in the digital assets. Quoting him or her right here. Regulators called the Department of Labor, and specifically the agency that enforces the ERISA. These damn abbreviations are rough. The EBSA, like anyone even knows what that stands for, and I already read it. You know what I mean? They're just keeping it real. And in 2022, they came out with some compliance assistance guidance that was very skeptical about crypto and the ERISA-covered plans. So that has put a damper on the ERISA-covered pension plans, adding crypto. Hence why Nipsey needs to become the chairman of the SEC. The strict enforcement of ERISA regulations and the ensuing fiduciary liability placed on the private pension managers means the capital inflows of the crypto markets from their retirement investment accounts will likely continue to be denominated by state pension plans until the guidance is reversed, as outlined right there. Several state municipal pension funds of the U.S. already have crypto exposure. Back in May, the state of Wisconsin Investment Board revealed $164 million investment into the Bitcoin ETFs. Also, Michigan followed suit in July by disclosing $6.6 million investments into the Bitcoin ETFs. And maybe RFK Jr. can help remove the freaking fluoride from the drinking water in Michigan. Wouldn't that be fantastic? Later broadening its exposure to digital assets in November of 2024, acquiring 460,000 shares of the Grayscale Ethereum Trust and the Grayscale Ethereum Mini Trust. Meanwhile, Florida, shout out all my Floridians, Chief Financial Officer Jimmy Patron, the official responsible for managing the state's pension fund, is now pushing for the biddy to be included in the state's pension programs. Patronus noted, hello Patron broskies, Bitcoin's function as digital gold in a letter urging the state pension funds to consider exposure to the biddy. In a subsequent appearance on CNBC, Patronus, yes please, said that the crypto is not going anywhere. They not like us, and cited Bitcoin's properties as a hedge against the inflation and a resistance mechanism against the central bank digital currencies, aka Satan. So there you have it, yo. Let me know if you agree or disagree. The pension funds are coming. The sovereign wealth funds are coming. The nation state adoption is coming. The empires are coming. The lizard folks are running.
This episode is brought to you by Atlassian. Atlassian makes the team collaboration software that powers enterprise businesses around the world, including over 80% of the Fortune 500. With Atlassian's AI-powered software like Jira, Confluence, and Loom, you'll have more time to do the work that matters. In fact, Atlassian customers experience a 25% reduction in project duration per year. Unleash the potential of your team at Atlassian.com. Atlassian.
They damn sure not like us. Next story of the day. Let's discuss this 180,000 target. Then we'll discuss a 300,000 prediction from Van Eck, a $90 billion asset manager. Then we'll tap into our live Q&A and premiere a brand new music video by our one and only Chandy 10 Music. Headline here reads, Bitcoin may reach 180,000 by the end of 2025. I think we can hit 180,000 before the end of 2024. How do you like those Granny Smith apples, broskies? The price of the Bitcoin may reach 180 G's, according to Georgie, the founder of the TYMIO decentralized finance platform. Now, in a statement, this person forecasted Verbitsky. I like that name, Verbitsky. It got bit in there. I dig it. A Bitcoin price between 100,000 and 120,000 by the end of 2024 or early 2025 before President-elect Trump assumes office on January 20th. Now, the TYMIO founder continued that Bitcoin may reach 180 Gs by the end of 2025 as more traders are drawn into the fray. And shout out Carlos. He just donated $5 for the cannoli fund. Respect, brother. I appreciate it. So yeah, Bitcoin's price can double during this bull run and has the potential to reach 180 Gs threshold. This takes time. We may witness this level closer to the end of 2025. The peak of the cycle could reach much greater levels as we progress into the next 2 years. My response, thank you, Captain Obvious. However, Verbitsky cautioned traders to properly manage risk by diversifying their positions, executing trades via the limit orders, and using options to avoid the devastating effects of rapid market downturns. Now, is Bitcoin supply shock incoming? I think so. And the TYMIO founder also predicted that the decreased block subsidy from the April 2024 halving, future halving events, and lost keys would trigger the supply shock and keep the Bitcoin volatility high. Quoting him here, Bitcoin becomes scarcer because fewer coins are mined each year. Plus, many are lost over time due to the forgotten passwords and misplaced wallets. This sets up the potential for a supply crisis in which demand significantly outstrips actual availability. In these circumstances, the price could rapidly accelerate, pushing volatility to new higher levels. I like that. Bring it. And in June of 2024, the Bitcoin Exchange Reserves, which is a metric tracking the total number of the Bitcoin available on the exchanges, dropped to a 3-year low. Bitcoin Exchange Reserves continued to decline and reach another low in August of this year. And I think they're currently at 5-year lows. So stack the biddies accordingly. Now, increased demand due to the President Trump election and macroeconomic factors further strained the already low Bitcoin supply for November 2024. You got to factor in nation-state adoption, Bitcoin strategic reserve for the United States of America on a national level, and now at a state level with Texas and other states following suit. And on-ramp Bitcoin co-founder Jesse Myers recently said these factors weren't the only thing driving the Bitcoin price towards 100K and pointed to the decreased block subsidy as the catalyst for the Bitcoin supply shock. I mean, basic math, family, when you have a very limited amount of the Bitcoin available and you have massive demand, numbers go up, numbers go parabolic, new all-time high, price discovery, and before you know it, 600,000 per biddy. Send it. Now for our feature story of the day. Van Eck issues a $300,000 Bitcoin price target. He was just recently interviewed. And shout out Satwise Jenks. Welcome to the Hollow Gang. This gong strike is for you, brother. But yeah, family, the CEO of Van Eck, the $90 billion asset management giant here in the States, says Bitcoin is going to $300,000 per coin. I watched the interview. Here's a short clip of it, but I'll just tell you the highlights. He ultimately says he believes Bitcoin will overtake gold, and by the time Bitcoin takes or overtakes half of gold's market cap, total market cap of gold right now is roughly 17 trillion. What's half of 17 trillion? maybe 8.5 trillion. So by the time Bitcoin hits an 8.5 trillion market cap, he says Bitcoin will be $300,000 per coin by then. Then the interviewer asks, why do you say when Bitcoin hits half the market cap of gold? Why didn't you say a quarter or all of the market cap of gold? And he said, well, if I was a Bitcoin maximalist, and not saying that I'm not.
Is it time to reimagine your future? The right business skills may make a difference in your career. At Capella University, we offer a relevant education that's designed to focus on what you need to know in the business world. We'll teach professional skills to help you pursue your goals, like business management, strategic planning, and effective communication. And you can apply these skills right away. A different future is closer than you think with Capella University. Learn more at capella.edu.
I would say it's going to overtake gold, obviously, but I'm just being very modest and very, what's the term? Like under promise, over deliver is ultimately what he was hinting at. So he's ultimately saying, let's just keep it easy peasy. Bitcoin will easily surpass 300,000 by the time it's 8.5 trillion market cap. And I agree with that. But let's dive a little deeper because Van Eck has been bullish on the biddy for quite some time. Global investment management giant Van Eck has reissued a 180,000 price target for Bitcoin at the peak of the current cycle. In the latest Bitcoin report, in which they published November 21st, 2 days ago, they said the digital asset, Nathan Frankovitz, the digital asset analyst, said the next phase of the crypto bull market is only just beginning. They predicted that an increasingly friendly regulatory environment of the U.S. and growing institutional interest could catapult Bitcoin to a price of 180 Gs within the next 18 months. Like many other market pundits, the analyst credited Trump's election victory as the primary catalyst for the move and has seen the price of Bitcoin reach as high as 99.9 in the last 24 hours. I said it before, I'll say it again, broskies. I got 99 problems. Bitcoin isn't one. And at this time, we got Bitcoin still maintaining at roughly 98,000, literally 2% from capturing the 100,000 milestone, which could happen any moment now. The analyst shared as of November 11th, Bitcoin entered a new phase where funding rates on perpetual future contracts exceeded 10%. Quoting them here, this shift points towards stronger short to medium term momentum as historically elevated funding rates have been linked to higher 30-90-day returns, reflecting heightened bullish sentiment and demand. However, they noted that the funding rates remain elevated. The market begins to shift into a phase where investors eyeing the longer-term returns over 1 or 2 year time span becomes unfavorable. Quoting them here, on average, purchasers made on days when funding rates were above 10% began underperforming at the 180-day mark, which this trend has become even more pronounced over the 1 and 2 year periods. Several analysts expect Bitcoin to be trading at a price of 100,000 any moment now, including your very own JV and Nipsey, the one and only. But let me know your thoughts, and when do you think Bitcoin will hit 300,000? When do you think Bitcoin will realistically hit a 7.5 trillion market cap, or 8.5 trillion for this sake, half the current market cap of gold? I personally think by the time we overtake gold, we'll be soaring in the 7-figure range, especially with the United States of America adopting Bitcoin as a strategic reserve with Trump at the helm, as we shared as a prediction in yesterday's podcast. But let me know your thoughts, family, and welcome to the Q&A segment of the live stream.
And don't forget to check out cryptonewsalerts.net for the full premium experience with video and to participate in our live Q&A. And I look forward to seeing you on tomorrow's episode. Hodl.
Dear fancy gift wrappers, you continue to amaze us. No present is too large or too complicated for you. Past, your inventive use of glitter leaves us amazed. This holiday season, you'll have your cut out for you. But you can leave the big red bows to us. Get offers on select vehicles at the Lexus December to Remember sales event, now through January 2nd. Experience amazing at your Lexus dealer.
With Lululemon, the real gift happens when they're living in it. When you give them the coziest scuba matching set, the real gift is this. And this. And this. This holiday, Lululemon makes it easy to give a gift that goes beyond. Open the moment. Shop now at Lululemon.com.
Welcome, everyone, to today's live show. In today's episode, I'll be sharing the latest technical analysis as well as breaking news. Michael Saylor says we're making $500 million per day. We'll also be discussing Bitcoin counts down to 100,000 as, again, we're right on the cusp of breaking out that six-figure milestone. Could be any moment now. Could be during today's podcast. Let's send it and let's get it. We'll also be discussing MicroStrategy completes their $3 billion raise to buy more Bitcoin as MicroStrategy falls 25%, as well as Allianz, Germany's biggest insurer, buys 24% of MicroStrategy's $2.6 billion notes. We'll also be discussing Texas taking baby steps towards strategic Bitcoin reserve, according to the Satoshi Action Fund. We'll also be discussing Trump's Crypto Advisory Council to set up promised strategic Bitcoin reserve. I'll be breaking down this report by Dennis Porter, which can send Bitcoin to seven figures per BTC. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Yo, what's good, crypto fam? This is first and foremost a video show. So if you want the full premium experience with video, visit my YouTube channel at cryptonewsalerts.net. Again, that's cryptonewsalerts.net. Today is pod episode 1826. I'm your host, JV. It's November 22nd, 2024. Yesterday, during our pump watch, we hit the all-time high, 99,600. ballpark. So again, $400 away from the coveted 100K milestone. We may usher that baby in here during today's pod. But anyways, fam, without further ado, let's kick it off with our market watch, as we do each and every day. As you can see on your screen, Bitcoin still in the green, hovering at around 98,500, up roughly 2% on the day. XRP was the big gainer, had a big breakout yesterday, still up 30% on the day, trading above $1.44. XLM, Stellar Lumens, a fork of XRP, always pumps when XRP pumps, also up 25%. And Cardano looks like it's about to touch $1 soon. It's trading in just shy of 94 cents, up 20% on the day. Ether's holding its own above 3,300, and as you can see, the bulk of the entire crypto market pumping and in the green. And checking out coinmarketcap.com, the total crypto market cap sits at an all-time high of $3.26 trillion. We got roughly 234 billion worth of volume in the past 24 hours, with the Bitcoin dominance currently at 59.4%, with the Ether dominance at 12.2%. And check that out, the highest Bitcoin market cap we have ever seen, on the cusp of hitting $2 trillion. Right now it's 1.95 trillion for the Bitcoin market cap. And checking out the top 100 crypto gainers of the past 24 hours, XRP leading the pack, up 65% for the week, 30% on the day. FTT, the native token of the FTX exchange, is up 24% on the daily, and Stellar up 23.5%. Let me know which alts, if any, you're bullish on for the bull, and I'll read your comments out loud here shortly. And check out the crypto greed and we'll first look at the crypto bubbles, then the crypto greed and fear index. As you can see, the bulk of the market pumping and in the green. Zooming out, on the monthly, virtually everything crushing it. So we've had a hell of a crypto bull run thus far here in Q4. And checking out the crypto greed and fear index. Wow. Yeah, go figure. Today we're at 94 extreme greed. The higher this number goes, the more likely of a pullback. Yesterday was an 82, last week an 80, and last month a 71 in greed. And checking out the time chain calendar, we have 174,493 blocks till halving 2028. We're currently on block 871,507, and you can still get 1,022 Satoshis per dollar. Before you know it, it'll be less than 1,000 sats per dollar. So stack them sats accordingly. Let's dive into today's technical analysis, aka astrology for the broskies. And we'll also be pulling up some of the live charts and checking out some of the headlines and what's cracking right now. Bitcoin prints a record 40% monthly candle as the price crossed $99,000. I got 99 problems. Bitcoin ain't one. Hit me. The Bitcoin price rose over 40.8% during Moonvember, recording a new all-time high for the biggest monthly candle as Bitcoin breached.
Want to shop Walmart Black Friday deals first? Walmart Plus members get early access to our hottest deals. Join now and get 50% off a 1-year annual membership. Shop Black Friday deals first with Walmart Plus. See terms at walmartplus.com.
$99,000. In fact, it was just above roughly 99.6, the current all-time high, as you can see here on the daily chart. Now, Bitcoin's monthly all-time high comes over 2 weeks after Trump won the 2024 U.S. presidential election. It seems we've been pumping price discovery practically every day since, inspiring a new wave of investor appetite for risk-on assets, such as the Biddy. Increasingly more analysts expect Bitcoin to breach the 100,000 milestone. November 22nd, stable flows to crypto exchanges reached a new record monthly high of almost 10 billion, flashing another optimistic signal for the Bitcoin price trajectory leading up to 2025, right around the corner. Are there more gains in store for Moonvember? I think so. Let me know your thoughts. November is historically the most bullish month for Bitcoin price action, with Bitcoin averaging over 46% returns, according to CoinGlass data as outlined here. Investor optimism also shows promising signs of the short term. Investor sentiment rose to 88, or extreme greed, November 22nd, up from last week's 85. And as I just shared with you earlier, we're now at 94 in extreme greed, which is a good sign that a correction is overdue, but nonetheless, we're right on the cusp of the coveted 100K. Now, the last time the index had a score of 80 was all the way back on April 9th, before Bitcoin saw an 18% correction over the following 3 weeks from above 69 to a bottom of 56. And congratulations, fam. Bitcoin's up over $30,000 in the past 30 days. Not too shabby. Now, the more upside to 100,000, as Bitcoin is the ultimate hedge against inflation. Well, it is. The industry is awaiting Bitcoin's run to 100,000. We all know the six-figure milestone is only a matter of time, considering Bitcoin's utility as a hedge against inflation. Quoting the chief operating officer of Redstone here, buying Bitcoin as a hedge against inflation makes fundamental sense, since Bitcoin as an asset has 0% inflation, thanks to stiff supply. There is still potential for generating wealth by late adopters, especially comparing the asset to gold that has hundreds of years of value, storage history, whereas Bitcoin as digital gold is only 15 years, 16 years to be a little more accurate, but nonetheless. Yes, some of the most notable crypto founders have previously voiced their worries about the growing greediness and amount of leverage in the markets. Quoting Chris Marsalik, co-founder of Crypto.com, warned that the crypto market needs deleveraging before Bitcoin can breach 100K. And breaking news, Michael Saylor was making the rounds on CNBC, flexing. And he says, we're making $500 million a day here at MicroStrategy as they continue to crush. And let's pull up some of the live charts, family, live right now via TradingView, via Coinbase. You can see live and in the flesh. This is the 1 minute chart. Let's zoom out a little bit, check out the 1 hour and work our way back so you can get some perspective of the market. Again, live chart action, Jackson. Here's a rising wedge formation on the 1 hour. We do have the blue target, which will take us to 105,000, 105,297 to be exact. So 105,000 in play here on the 1 hour chart. And zooming out from there, we'll take a quick look at a 4 hour. The 4 hour chart also very bullish right now. You can see just been ascending. There's a bullet pennant formation here in the green. You can see the target sitting at 108,145. 108,000, send it. I will hit the gong to that. 108K in play, family. And zooming out from the 4 hour, we take a look at the 1 day. Very bullish as well. 4 consecutive green daily closes. And again, since the pump of election night, we have been pumping nonstop in the markets, in the crypto sphere here. As you can see, very bullish momentum on the daily chart. Big green candles, Godzilla candle incoming. Let's go. And zooming out from there, we check out the 1 week. We still have the sexy cup and handle target. 3 consecutive weekly candle closes in the green. Very impressive, might I add. And the cup and handle is sitting at 124,000 in play here, Q4. We still have all of December, and we still have the rest of Moonvember to get us there. Let me know if you feel we'll hit that target of 124,000 before the end of the year. And zooming out a little further, we'll check out the 1 month. You can see big mega Godzilla candle forming for the month of November, already 40% gains, and the previous 2 months have been dwarfed by what we have seen here in Moonvember as Bitcoin continues its ascent to 100,000, currently at 98.6, looking to retest 99 G's. Like I said, I got 99 problems. Bitcoin ain't one. Hit me. Let's go. But anyways, let's continue with the news. Let's continue discussing 100K in play.
Empower your business or digital agency with Bluehost, trusted by over 5 million WordPress users globally. Bluehost features top-to-bottom hosting optimizations designed specifically for WordPress, giving you 24/7 access to a team of experts for support, plus thousands of WordPress help articles. So if you want to streamline WordPress website creation with intuitive controls and premium support, choose Bluehost, powering over 2 million websites worldwide.
The headline next reads, Bitcoin counts down to 100K Bitcoin price as shorts risks a violent breakout. Here you're looking at the 1 hour chart. Bitcoin came within 1% of 100,000. In fact, it came within 0.4% of 100 G's already. So November 22nd, the bulls ain't playing no games round yonder. TradingView confirmed the latest news. Bitcoin breaking 99.5 over on Bitstamp. Again, roughly $400 away from the 100K milestone. After a brief dip below 96, Bitcoin rebounded into Asia trading session to set up what could be seen as a showdown with 6 figures. Bring down the showdown. Quick draw McGaw. Let's go. Still seeing limit bids moving higher with underlying spot buyers, positive market signal. A lot of the aggregate spot supply around 100K. Price currently is chewing away at the supply. Before this had preceded a pretty violent breakout. That's why we got the shades on to prevent the violence from the laser eyes. The chart showed ladders ass clustered in the upper 99,000 area on the Binance order book, as outlined right here. Scoot-eyed ass appeared above 100K as a suggestion that the market was pricing in a further parabolic upside. Let's go. Meanwhile, material indicators noted some of the traders were tempted to short Bitcoin at the current levels. Silly shorters, quoting them here, shorts are getting lured in. If you are taking the bait, be prepared to get squeezed. And quoting an analyst the other day that just resonated with me, you'd got to be mildly retarded to be selling at a time like this. The day prior, CoinGlass confirmed short liquidations reached just shy of 115 million. Binance avoids the FOMO volume spike. Observing the exchange activity, on-chain analytics Crypto Quant noted the curious trend. After spiking as the overall crypto market cap beat its old all-time highs earlier in the month, Binance aggregate traded volume has declined. Quoting them here, the recent surge in the spot trading on Binance occurred November 12th, coinciding with the crypto market cap nearing the previous all-time high, which was, last month there. However, trading volume has since decreased by half, while the total crypto market cap enters price discovery mode. New all-time high at play. This decline in spot trading activity may suggest the market has taken a breather, with investors exercising some caution. So there you go, yo. Next story of the day. MicroStrategy completes their $3 billion raise to buy more of the Bitcoin as MicroStrategy finally falls a little bit, 25% after breaking unheard of all-time highs. So let's break this one down. Shout out to the Giga Chad. Mikey Saylor. MicroStrategy completed a $3 billion offering of 0% convertible senior notes due in December of 2029. By that time, Bitcoin will most likely be $1 million. Go figure. With plans to use a portion of all the proceeds to buy more of the biddy. The business intelligence firm announced the completion as its shares retraced more than 25%. November 21st, Google Finance showed the convertible senior notes came at a 55% premium with an implied strike price of $672, a predetermined price at which an option hodler can buy or sell MicroStrategy Class A common stock. As Saylor announced here, MicroStrategy has completed a $3 billion offering of convertible notes at 0% coupon with a 55% premium with an implied strike price of roughly $672. The 0% senior convertible note means it will not pay regular interest to the bond hodlers. These convertibles are sold at a discount and will instead mature to face value if they are not converted prior to the maturity date. They're also senior to common stock in the sense that hodlers have priority in the event a bankruptcy or liquidation. MicroStrategy could buy about 30,600 Bitcoin if it were to spend the entire $3 billion on Bitcoin, which it probably will, for Christ's sake. The $3 billion offering follows MicroStrategy's November 18th announcement to raise $1.75 billion at 0% interest. All I got to say is, if you're going to borrow billions, you might as well do it at 0% interest. It only makes sense, which was then increased to $2.6 billion November 20th. The offerings are part of the MicroStrategy intent to raise $42 billion in the next 3 years to stack more of the Bitcoin under the 2121 plan. Let that sink in. He made an announcement last week that they're going to raise $42 billion within 3 years to stack more Bitcoin. Their ultimate goal is holding 5% of the circulating Bitcoin supply, which is just above 1 million Bitcoin. They're already a third of the way there. If I was a betting man, I'd say Michael Saylor achieves this goal within 12 months at the rate he's going.
Is it time to reimagine your future? The right business skills may make a difference in your career. At Capella University, we offer a relevant education that's designed to focus on what you need to know in the business world. We'll teach professional skills to help you pursue your goals, like business management, strategic planning, and effective communication. And you can apply these skills right away. A different future is closer than you think with Capella University. Learn more at capella.edu.
But what do I know? I'm just a podcaster. MicroStrategy currently holds 331,200 Bitcoin, worth over $32 billion, the most of any public company, and they were the first publicly traded company to put the Bitcoin on the balance sheet, and that was back in 2020, so shout out to Saylor. Well done. MicroStrategy shares fell over 25% from its highest point of $536 to now $397. Let me know how many of you are holding MicroStrategy stock. The word on the street is it's going up forever, Laura. The fall came as Citron Research revealed it hedged a short position on MicroStrategy, suggesting the shares had become overheated. And ironically enough, Jim Cramer was just saying, Bitcoin is the buy of the century. You can't make this ish up. MicroStrategy is still one of the best performers in the U.S. markets at 2024, up 480% year to date. Obviously, it outpaced Bitcoin this year. It was the second most traded stock in the U.S. November 20th as more investors weighed it up. The bull case and risks of the Bitcoin exposure through MicroStrategy. Saylor's firm contributed to a record-setting $70 billion trading volume yesterday, November 21st, from the Bitcoin industrial complex, consisting of the U.S. spot Bitcoin ETFs and Bitcoin-related stocks like MicroStrategy and Coinbase. Bitcoin on the cusp of retesting 99, again, 1% away from the coveted 100K milestone. So there you have it. And welcome everyone joining the live stream. But anyways, let's continue. We discuss MicroStrategy, doing its thing. Well, Allianz, I don't know if I'm pronouncing this right, it almost sounds like aliens. Germany's biggest insurer bought 24% of the MicroStrategy's $2.6 billion notes. Germany, it's ironic. Didn't the German government just dump mass amount of Bitcoin at 50 Gs? If they would have held, they would have had billions of more in dollars. However, they sold, and let that be a lesson to everyone dumping their biddies. Germany's largest insurance company, aliens, I'm just going to call it aliens, why not, reportedly purchased nearly a quarter of the MicroStrategy $2.6 billion convertible note offering, signaling the increased institutional interest in the biddy. Aliens, the second largest insurance provider in Europe, acquired roughly 25% of the MicroStrategy $2.6 billion note sale for institutional investors, which closed yesterday, November 21st. The insurance giant made the investment across 4 different sub-organizations, according to Bloomberg terminal data, shared by Petrushki in a November 22nd post, which stated the positions were filed in July and October. The shares are held by the following sub-organizations: Aliens, Global Investors Luxembourg, 14% Aliens, Global Invest of America LP, 6% Nicholas Applegate Cap Management, and 3.7% of the Aliens Global Investors. There you go. Now, a significant portion of Aliens investment could directly influence the Bitcoin price rally, as MicroStrategy plans to use the funds to acquire additional Bitcoin. We call it the sailor put, and for general corporate purposes. I mean, who in their right mind wouldn't borrow billions of dollars in fiat for 0% interest and not have to pay it back until 2029? I mean, sign me up. It's going up forever, Laura. The news comes shortly after Bitcoin crossed 99,000, a new record high, after printing the biggest monthly candle ever of currently 40%, still going, with 8 days left before the end of November, bolstering analyst expectations for a rally above 100 G's. Now, you already know Sailor's MicroStrategy completes their $3 billion note sale amid the Bitcoin rally. As we pointed out, MicroStrategy initially planned an offer of just $1.75 billion. However, it always ups its offerings. However, the world's largest corporate Bitcoin holder decided to supersize that baby, to $2.6 billion just 2 days later. MicroStrategy completed the note offering officially yesterday, raising $3 billion worth of the capital, which means more incoming Bitcoin being bought, signaling the initial purchasers bought the maximum amount of the additional notes during the offering, according to Michael Saylor, the one and only founder of MicroStrategy. Quoting Ryan Lee, chief analyst of BitGet, if history repeats itself and Bitcoin price grows as projected, a 14.7% from the current price level will push the Bitcoin well above 100,000 target for the month. The post-halving cycle trend is also very positive when projecting the future of the biddy. So there you have it, yo. Let me know your insights before we dive into our next story of the day. Discuss Texas taking baby steps towards strategic Bitcoin reserve, and the Trump administration ultimately confirming they're going to be making a Bitcoin strategic reserve for the United States of America, sending Bitcoin to a 7-figure.
This episode is brought to you by Atlassian. Atlassian makes the team collaboration software that powers enterprise businesses around the world, including over 80% of the Fortune 500. With Atlassian's AI-powered software like Jira, Confluence, and Loom, you'll have more time to do the work that matters. In fact, Atlassian customers experience a 25% reduction in project duration per year. Unleash the potential of your team at Atlassian.com. Atlassian.
Milestone. I understand, broskies, we haven't hit 6 figures yet, but I already smell 7 figures on the way. But anyways, let's continue with the news. Next story of the day. Texas is taking baby steps towards a strategic Bitcoin reserve, according to the Satoshi Action Fund, which is ran by Dennis Porter. And then we'll be discussing some bullishness with the U.S. Trump's Crypto Advisory Council setting up the promised strategic Bitcoin reserve as the hash war continues, as the race to stack thy biddy, not just in the United States, but now all around the world. So let's break this one down. Strategic Bitcoin reserve legislation is reportedly the subject of preliminary discussions among Texan lawmakers, according to the nonprofit advocacy group, the Satoshi Action Fund. November 21st talk of the North American Blockchain Summit in Texas, covered by Cointelegraph CEO and Satoshi Action Fund Dennis Porter said the group spoken with lawmakers who just started conversations to introduce strategic Bitcoin legislation in Texas. The implications of the state of Texas moving forward with strategic Bitcoin reserve legislation cannot be understated, according to Porter, who said the impact of having a strategic Bitcoin reserve in Texas would be significant, as the state has the world's 8th largest economy with a GDP of $2.4 trillion as of 2022, according to the Texas comptroller. Quoting Dennis Porter here on X, breaking, I have officially been asked to speak in Texas and will present on strategic Bitcoin reserves. Lawmakers from across the USA and the world will be in attendance. So there you go. There has already been some movement on this concept. On the larger stage, we have U.S. Senator Cynthia Lummis, who introduced a bill in July to establish a United States Bitcoin strategic reserve, which, if approved, would create a Bitcoin fund to hedge against the national debt. And it looks like we got that approval, family. 7 figures in play, according to Bitcoin OG Adam Back. That's all it'll take. And also, we got the Pennsylvania lawmakers also recently introduced legislation in the State House of Representatives to permit its treasury to hold up to 10% in Bitcoin on the balance sheet as a tool to protect against inflation. That's right, hyper-Bitcoinization incoming. Porter says that beyond just protection against inflation, strategic Bitcoin reserves at the national and state levels would help secure Bitcoin mining in the U.S. And what did Trump say in Nashville when he gave the speech? If he is elected president, which he's already been elected, he says he will make the United States of America a Bitcoin mining hub of the world. Let that one sink in. Quoting them here, Bitcoin mining runs on razor-thin margins, and all that would take is a couple of outside actors, Russia, China, saying, hey, you know what's up. Let's just suppress the price of Bitcoin long enough, and we'll just kill off the American Bitcoin mining in this country. Well, it's not going to happen any longer, family. So, great way for us to protect ourselves from outside influence, undue influence from our foreign adversaries, is to be in the market buying and selling the Bitcoin, acting as a shock absorber for the incredible Bitcoin miners that were here in this country. Well said. And according to Porter, a Bitcoin reserve is comparable to other historical decisions that have helped shape the modern United States, such as the Louisiana Purchase and acquiring Florida and Alaska. Smart moves there. And during his campaign, President-elect Trump made many crypto-related promises, including establishing a strategic Bitcoin stockpiling the bitty. And since then, the idea has spread. Porter said there has been incredible momentum built for this issue. And there is a race, we call it the hash war, on to see who can pass strategic reserve legislation first, a stance he also took to X before the event. As shared right here, breaking, I'm now in a race to pass strategic Bitcoin reserve legislation into law before Trump can sign the strategic Bitcoin reserve executive order. To be honest, I'll probably pass this law in multiple states before Trump has time to make it a reality. The states will lead. As we know, Trump hits office on January 20th, and Max Keiser, the high priest of Bitcoin himself, said, I would be shocked if Bitcoin doesn't hit 220,000 per coin by the time Trump takes office on January 20th. We may have the Strategic Bitcoin Reserve Act already passed at a national level, or will it first occur at the state level, as Dennis is hinting at? Let me know your thoughts. He also says we are also very excited to have that race, a race where no matter who wins, all of us win. Amen. And on the international stage, Polish presidential candidate just recently vowed to create a Bitcoin reserve as well. Let's go. In a November 17th statement, if he wins the election. And I think more politicians are going to be embracing the Bitcoin, leading in Trump's footsteps, ultimately. I mean, making America a strategic Bitcoin reserve for the biddy, stockpiling the Bitcoin, freeing Ross Ulbricht on day one, and firing Gary Gensler. It doesn't get no more bullish than that. The markets can thrive once again without Gensler at the helm of the SEC. Come on, 100K. We're getting so damn close, it's not even funny. Here we go again, retesting 99,000, 1% away from 100K. Send it.
And don't forget to check out cryptonewsalerts.net for the full premium experience with video and to participate in our live Q&A. And I look forward to seeing you on tomorrow's episode. Hodl.
With Lululemon, the real gift happens when they're living in it. When you give them the coziest scuba matching set, the real gift is this. And this. And this. This holiday, Lululemon makes it easy to give a gift that goes beyond. Open the moment. Shop now at Lululemon.com.
This episode is brought to you by Atlassian. Atlassian makes the team collaboration software that powers enterprise businesses around the world, including over 80% of the Fortune 500. With Atlassian's AI-powered software like Jira, Confluence, and Loom, you'll have more time to do the work that matters. In fact, Atlassian customers experience a 25% reduction in project duration per year. Unleash the potential of your team at Atlassian.com. Atlassian.
Bitcoin just hit a new all-time high, tapping 99,100, 100K, now officially in play. In today's show, I'll be breaking down the latest technical analysis. Also breaking news, U.S. Senator Cynthia Lummis calls for the U.S. government to sell its gold and buy Bitcoin. What a smart plan. Shout out Cynthia Lummis. Breaking news from Dennis Porter. I am now in discussions to introduce strategic Bitcoin reserve legislation. The Bitcoin Chart Watchers Anonymous. This is the Q&A segment of the live stream. We got 2,500 people here live and in the flesh. Still streaming on X. Still streaming on Rumble. Still streaming on YouTube as Bitcoin continues taking over the world. And don't forget to check out cryptonewsalerts.net for the full premium experience with video and to participate in our live Q&A. And I look forward to seeing you on tomorrow's episode. Hodl.
Investing success relies on two things, skill and stamina. At New York Life Investments, we're an asset management partner built to help you master both. Tap into forward-thinking strategies and real-time insights at NewYorkLifeInvestments.com.
In today's data-driven world, you need real data to shape an effective marketing strategy. That's where Ahrefs comes in. Ahrefs is a marketing intelligence platform powered by big data. It shows you exactly what your target audience is searching for and how you measure up to your competitors. Whether you're making day-to-day marketing decisions or defining your long-term digital strategy, Ahrefs delivers real-time insights that help you grow your brand. Head over to ahrefs.com to get started. That's AHREFS.com.
Bloomberg Audio Studios.
Podcasts, radio, news.
I'm Kaylee Lyons alongside Joe Matthew. We have gotten confirmation of what Bloomberg had already reported. The president-elect Donald Trump is nominating Scott Bessent of Key Square Group to be the Secretary of the Treasury. Donald Trump, in a statement posted on True Social, describing him as someone who has long been a strong advocate of the America First agenda. Joe.
We actually spent some time with the 62-year-old Scott Bessent right here at this table in Washington, D.C., Kaylee, not that long ago when it was still unclear who was going to win the election. And, of course, since then, we've heard any number of names bandied about. Scott Bessent has always been on the short list. We spent some time talking about his relationship with Donald Trump and what Donald Trump's relationship with the Federal Reserve will be. Let's listen.
He has a deep understanding of financial markets as opposed to most politicians. So he wants to be involved in the conversation. He has very well-formed opinions. He has a lot of private sector friends. So he just wants to be a voice.
Just part of our conversation that touched on a lot of themes, Kaylee. One thing that Scott Bessent was able to do was to convince the markets, to convince the news media that this idea of combining tariffs and tax cuts could result in meaningful growth.